Yes. Yes. Please check it out whether audio and video is clear in your live. Yes. Please check it out whether audio and video is clear in this live. Yes, very good morning. So now we can start our discussion with the assessment of various entities chapter. Okay. In our study material, always we have this chapter in the first. So name also assessment of various entities. But in this chapter, in study material, non-resident also included only. Assessment of individual including non-resident also included in the chapter only. But first we can complete the assessment of various entities topics. Yes, as per our material classification, yes, we have an AMT concept, not in our CMA final, but regularly they are asking the questions from the AMD concept. That's why we can discuss it also today. Next, assessment of a company, very important. If luck favors, directly we can get the 14 mark question from the minimum alternative tax only. That is an assessment of company related concept. And PCBP, if they are given as a question, maybe we can do some mistakes. But if they are given the minimum alternative tax concept related question, directly we can get the out of 14 also we can get if you know our concept. Now, then after, I will tell you the business test overall view and we can discuss direct problems. Next, investment fund also one area is important, that is a carry forward of losses concept. We can discuss that also. Now, last, I will tell you political party electoral trust provision as well as mutual concern problems also we can discuss. This is an agenda for morning session. We can complete, but remember, understood the provisions, then after we can do some problems on your own also you can do remaining problems. Okay, so listen carefully. Directly I want to start with the alternative minimum tax. So shortcut we can call it as a what ma? AMT. Alternative minimum tax, in shortcut we can call it as AMT. So regularly we are getting these questions from the AMT concept, but actually it is not involving in our CMA final. Okay. Now, AMD concept, alternative minimum tax, what is the section number? Please remember section number also, section 115 JC. Section 115 JC. So, I will tell you the concept, listen, whatever the points I underline. So, please give me confirmation about audio and video clarity from online. Happy Sunday. Just listen the class first. Just tax, in shortcut we can call it as AMD. Remember, sir, if any SSC, what is that ma? Any SSC is claiming the, if any SSC claiming the section 10AA deduction, Remember, repeat along with me. Section 10AA deduction. Second one, section 35AD. Yesterday we discussed what is that? Specified business related. Third one, chapter 6A deduction from 80IA to 80RRB except 80P. These are income based chapter 6A deduction, 80IA to 80RRB except 80P if you claim. Any one, remember, not all ma, any one section if you claim. These are the dangerous sections in Income Tax Act 1961. Because of these sections deduction, SSE's total income will be reduced to zero. Or maybe he can get sometimes a loss also because of these deductions. So that's why if you are following the normal provisions of Income Tax Act 1961, that means what is the normal provisions? So first we need to aggregate that all the heads of income after providing the chapter 6A deduction. Directly if you are calculating the tax liability as per normal provisions of Income Tax Act 1961, tax liability maybe it will be reduced to zero. So this is then completely will not accepted by the department. It will not accepted by the department, even though they are provided these sections also, but they will not accept, sir, you are paying the tax at a zero, they will not accept. That's why they introduced the alternative minimum tax. Sir, please pay at least minimum tax alternatively. So what is the minimum tax they want to collect from these type of an SSEs? We'll discuss. Now AMT concept is applicable for all SSEs except whom? Company. So why they are excluding the company? Company having the separate provisions like what ma? MAT. Separate provisions like what? MAT. Now, remember, if AMT concept is applicable, then what is the tax they are required to pay? Income tax payable by the SSE, higher of the following. A, B. First one, please calculate tax liability as per the normal provisions only. Yes, you got some amount that should be compared with the 18.5% of what? Adjusted total income. Now, 18.5% is only AMT rate. 18.5% only AMT rate. If you are comparing that with the, yes sir, 18.5% of adjusted total income with the normal provisions related tax liability, please select whichever is higher. For that we have to add what? Health surcharge, health and education cess. That is only the tax liability is required to pay under AMT provision. What is the AMT rate? 18.5%. What is that adjusted total income? We can discuss now. So what is our point, sir? If you have calculated the total income as per the normal provisions of Income Tax Act 1961, it is a zero only or very less only. Now, we want to pay the tax by using the alternative minimum tax provision. On that occasion, we need an help of what? Adjusted total income. In exam also, we have to calculate this adjusted total income separately. How to calculate the adjusted total income? What is that? How to calculate the adjusted total income? Remember, please, already we calculated the total income as per normal provisions of income tax. How we can calculate the total income as per normal provisions? Aggregation of 5 heads of income, we can get gross total income. Please take all these deduction, you will get net total income. Okay. For this, we want to add the already claimed these 3 deductions. Because of these 3 deductions, total income reduced. I want to nullify the effect of these 3 deductions. Please do add back. First one, section 10AA. Second one, section 35AD. Third one, 80IA to 80RRB except 80P. Remember one thing, already in yesterday's session we discussed, if you are claimed section 35AD deduction, you will not get depreciation on that asset because we are recorded that actual cost of that asset as an 0. But now we are nullifying the section 35AD deduction. Now we can claim depreciation separately. Previously, we don't have any chance to claim the depreciation because they are given the section 35AD deduction. Now, we are cancelling the section 35AD deduction. That's why we can claim section 32 depreciation. Many students are not understanding the reason behind it. Remember, previously, if you claim section 35AD deduction, you don't have any chance to claim what? Depreciation. But now they are cancelling the section 35AD deduction. So that's why you can claim depreciation. Finally, you will get the adjusted total income. On that, what rate we have to apply? 18.5%. AMT is applicable for all SSCs other than company whose adjusted total income is up to 20 lakh. AMT concept is not applicable. So, finally, in exam also you have to verify if your adjusted total income is more than 20 lakh, then only you can apply the what concept ma? AMT. Definitely they can give this type of trap. So if I am calculating the adjusted total income, I got 19 lakh ma. AMT concept is not applicable for me. Now as per normal provisions only we can pay tax. Clear? Now AMT rate. Yes ma. Generally what is the rate ma? 18.5%. So next, if that AMT is if that entity is an cooperative society, what is the rate ma? 15%. In exam, please check properly who is an SSC. Partnership firm, generally 18.5% only. If that is an cooperative society, what is that ma? 15%. If that entity located in IFSC, do you know what is that IFSC? International Financial Service Center. Okay. Sir, in special economic zone, our target to attract the mostly Indian investor. Example, so this location is classified as an SEZ. We are offering the tax incentives so to the public who are doing the business in this locality. Mainly SEZ agenda nothing but we want to attract that investments from the domestic territory only. But in IFSC, we want to attract that investments from the foreign. Okay, if IFSC means that is an area, we are given the tax incentives, the mostly for non-residents or foreign companies only. So simply we can say it is an upgraded version to the CEZ. CEZ attracting the only Indian investment. Some cases they can attract the foreign also. But IFSC exclusively targeted for which investments? Foreign. So that's why here we are given the benefit that is what much as 9% of AMT rate only. Compare, generally you have to pay that AMT at the rate of 18.5. But we are given the benefit to that what ma? Entities located in IFSC, that is just 9%. Now, non-applicability of AMT concept. Non-applicability of AMT concept. Sir, I am not at all claimed any one of these three deductions. What are the three deductions ma? Please let me know. Section 10 AA, 35 AD, 80 IA2, 80 RRB except ATP. So that's why no need to follow the AMT concept. If I am claiming any one of these section, then if adjusted total income is more than 20 lakh, for me AMT concept is applicable. I am not claimed 10 AA, I am not at all claimed 35 AD, I am not at all claimed 80 IA2, 80 RRB except ATP. So that's why AMT concept is not applicable for me. Now, AMT concept is applicable only if that adjusted total income exceeds how much ma? But here up to 20 lakh, that's why AMT is not applicable. One more twist is there. AMT is not applicable for if SSC following the default tax regime and this is an optional tax rates for that which thing ma? Cooperative society. So that means if you are following the old regime, then only AMT concept is applicable. Are you clear up to now? Yes. Now, there is an important, they are given the 4-mark question from the AMT credit ma. 115 JC is related to, 115 JC is related to which concept? AMT. Now 115 JD is related to AMT credit. Now if you completed the AMT concept, so similarly math also same only. We can complete in a quick manner. First, are you understood up to now? What are the sections we have to remember? Deduction section 10 AA, AD, IA2, AD or RB except ATP. Now, if AMT is more than normal income tax, sir, I calculated the alternative minimum tax, that is an 18.5% of adjusted total income. I got 15 lakh. As per normal provisions of income tax, I got what, ma? 12 lakh. So now, can you tell me which thing I need to pay, ma? AMT only, whichever is higher. But now, whatever that excess amount than the normal income tax, that is called as what, ma? AMT credit. Whenever you are paying the AMT more than the normal income tax, that more excess over, that is an excess over that normal income tax amount only called as what, ma? AMT credit. Now, please listen this chapter. I want to live students, please listen the assessment of various entities chapter. Yesterday's session already done. I will try to upload it after some time. So please try to listen this. Otherwise, you can close that and you can listen after uploading PCBP also. No problem. Next. So what is the purpose of that AMT credit? I will tell you. In year 1, AMT credit how much created, ma? 3 lakh. That can be carry forward and set off for how many assessment years, ma? 15 assessment years. 15 assessment years. Important MCQ. Now, sir, when we can utilize that AMT credit? Year in which normal income tax is more than AMT. Sir, in third year or second year or any year also, unfortunately, normal income tax is more than the what, ma? AMT. Which thing I need to pay for this year, ma? Whichever is higher. Means nothing but 16 lakh. I want to pay that how much amount as an tax, ma? 16 lakh. From that, I can set off the already we have AMT credit, how much, ma? 3 lakh. Many students are reducing the total 3 lakhs here. That is not possible. To that extent of difference between these two only we can do what, ma? Set off. Even though we have an 3 lakhs AMT credit, but we can set up only how much, ma? To that extent of difference between normal income tax and AMT. So now, what is the difference between these two, ma? 1 lakh. That's why we can set off only 1 lakh. So can you calculate what is the balance AMT credit we have in our account, ma? Already 3 lakh is there, but 1 lakh already we used for the ESMA payment of tax. The balance 2 lakh can be carried forward for how many years, ma? Remaining 14. But 1 year is already exhausted here. The remaining 14 years only we can carry forward that things. Are you clear? Now, so AMT concept is totally covered. So now I will tell you one simple problem. Then we can discuss the MAT provisions also. So please open workbook relating to assessment of various entities. Question 1 and question 2 related to what, ma? Question 1 and question 2 related to AMT concept only. Now I will take the directly question number 1. It is a more detailed one. I will try to cover the question number 1. Listen carefully. I will go in a speed manner. Yes. Please check it out the screen. No need to refer and no need to note it down anything. Just refer the question. Procure limited liability partnership firm set up a special economic zone in the financial year 2021 for the production of what, ma? Washing machine. So remember that is located in SCZ. That means we can claim the deduction 10AA. So that unit fulfills all the conditions under section 10AA also. That means they are eligible to claim the section 10AA. Automatically you have to remember one concept, that is an AMT. Now, during the financial year 23-24, that means next years they set up a warehouse facility for the ESMA storage of agriculture produce. In which state, ma? Your state only, Tamil Nadu. So that means specified business. Agriculture produce related warehousing facility is nothing but what, ma? Specified business. It fulfills all the conditions. All the conditions means they are not claiming the section 10 double, sorry, they are not claiming the what ma chapter 6A deduction under the heading C. They are not at all claiming, but remember, so section 35 AD eligible. Remember, capital expenditure can be taken as a deduction 100% excluding the what ma land, goodwill, financial instrument. So that's why including the land, how much amount they are given? 10 lakh. But what is that amount eligible for deduction ma? Excluding land, that is an 65 lakh. Now, it is an operationally effect from the 1/4/2024. So can you tell me that already capitalized also? That means before incorporation, whatever that expenses are incurred, if that is capitalized, we can take that as a deduction in the year of commencement, that is 24-25. Now, they are given some points related to the computation during the previous year 24-25. What are the points they are given? Profit of an unit located in SEZ, how much? 40 lakh. How much amount ma? 40 lakh. Export sales they are given, domestic sales they are given. So remember, which profit is exempt ma first 5 years? Export profit. Remember, this is total profit 40 lakh. Out of that, I want to calculate the export sales related profit. Can you tell me how much ma? 30. So nothing but total profit 40 lakh. Out of that, export sales related to how much profit we have to calculate, because 100% or 50% of which profit is exempt ma, export profit is exempt. So that's why I calculated the export profit here. Now what is the section 10 AA? Because we are in the first 5 years, so that's why we can claim the 100% of 32 lakh. So this is a total sales ma, but total sales related we got 40 lakh. But out of that, export sales related how much amount we computed. Now, so profit from the specified business before claiming section 35 AD. Before claiming section 35 AD, how much amount of profit we have? 1 crore 5 lakh. So directly they are asking compute income tax including which provisions ma? AMT provisions. Now first, here what is that procedure? Calculate tax liability as per normal provision. Calculate tax as per AMT provision. Whichever is higher, that is only we have to pay tax. Now, first we can calculate the tax liability as per the normal provisions or regular provisions. Shall we calculate ma? Yes. PCBP head of income is there ma. First we can calculate the unit from the SEZ. What is the profit we got ma? 40 lakh. What is the total profit you can take? Last we can give the what ma deduction under section 10 AA as a deduction. Total profit you can include. Now this is one business. Second business, specified business we have, that is 1 crore 5 lakh. Out of that, what is that deduction we can take ma? 65. Because land is not eligible, that's why we can take only 65. So that means total profit from this business totally how much ma? 40. So gross total income 80. From that already we calculated section 10 AA deduction how much we can take ma? 32 lakh. If I am claiming that I got in total income how much ma? 48 lakh. So please take that SSE is an LLP. Tax rate is 30%. Surcharge is an applicable for LLP if the total income exceeds how much ma? 1 crore. But now 48 lakh only. 48 lakh only. Calculate 30% on 48 lakh and please add the health and education says total tax liability as per normal provision how much we got ma? 14,97,600. Then now we have to calculate the tax liability as per AMT provision. Now we have to calculate tax liability as per which provisions ma? AMT provision. So in AMT provisions tax liability, first we have to compute that what ma? Adjusted total income. So shall we start that computation of adjusted total income? Yes. Can you tell me what is that format ma? We have to start with the total income as per normal provisions of income tax. Can you tell me what is the total income we got as per the normal provisions of income tax ma? Ma? So we have to start with that. What are the things we have to do? Add back ra? So whatever the deductions we claimed 10 AA 35 AD. Please add the section 10AA 32 lakh. But remember, while you are adding the section 35 AD, we have to reduce the what ma? Depreciation. We have to reduce the depreciation. But in this question, what is the twist? I will tell you. In this question, what is the twist? I will tell you. Depreciation rate, definitely the student can confuse here. Warehousing facility for the storage of what ma? Agriculture produce. Warehouse means that is a building. Building general rate is what? 10%. Yesterday we discussed. Building general rate is what ma? 10%. So that's why 10% 60 lakh. 10% of what ma? 65 lakh. Why we are taking 65 ma? So land value 10 lakh. If you remove the land value, building value 65 lakh. So that is only the point. Please observe. If you removing the depreciation, then what is that amount we have to add totally ma? 58. So then adjusted total income is 1 crore 38 lakh 50,000. Now you have to open one folder. What is that point? Adjusted total income is more than 20 lakh. Then we have to apply AMT concept. What is that AMT rate? 18.5. Now in adjusted, okay, if you got an adjusted total income, this is only we need to deem it to be treated as what ma? Total income. So that is total income means 1 crore exceeded or not exceeded? Exceeded. Then add surcharge. Surcharge needs to be applied on what rate ma? Babu, income tax, that is on 25, 62 to 50. That is nothing but applied on what ma? AMT related tax liability. Surcharge directly, if you are applying on total income, you will get definitely 90 marks in your exam. 100 minus 90. If you are doing the basic mistakes, please remember, surcharge always will collected on what ma? Income tax. But income tax means here what ma? AMT. Now, please calculate, then you will get the, yes sir, total. For that you have to add the health and education cess. Please do rounding off also. As per alternative minimum tax provision, which one you have to pay ma? 2984 510. Whichever is higher, okay, in the screen only both the things are available. Please check. 14,97,600 is tax liability as per normal provision. Tax liability as per AMT provision is 29,84,500. Whichever is higher? AMT. So that's why you have to pay the AMT. But now you have to remember one thing. If AMT is more than normal income tax in that year, we have to create the AMT credit. Here also students are doing mistake. Total amount, this one. And after adding the surcharge and education cess, this is on total amount. Difference between these two only called as AMT credit. Remember, 29,84,000 AMT, normal income tax provision, then difference only we can call it as what ma? AMT credit. Sir, in exam, if they are given this question for 14 marks, if you are solving the alone, you will not get full marks, sir. But you have to show the what ma? Export profit working note. And you have to write the depreciation, what is the rate we are considered. And adjusted total income format also. And adjusted total income is exceeds 20 lakh. That's why AMT concept applicable. If you are writing the only few note points along with the question, then only you will get full marks. Not only for this question, in tax, every question you have to write the note points. Sir, what are the note points are required to write? Whatever the provisions you applied in that question, please put up as a side heading and you can write at least 3 or 4. Okay, if time is not sufficient to go through it, yes, in the last 10 to 20 minutes also you can write the note points. So note points can be written in a own language. No need to think about the grammar, spelling mistakes, etc. You can write all the things in your own language. Are you clear with the AMT concept? Shall we start the assessment of a company directly? Shall we start assessment of a company online? Okay. Middle lo maatladukovaddamma. Remember. Shall we start now? Now, assessment of a company. In this assessment of a company, we have to discuss the totally the 4 concepts we have. Every concept is important. First, Yes, MAT concept is there. Second one, optional tax rates for the company. How many optional tax rates available for company? 115 BA, BAA, BAB. That too for which domestic company or foreign company? For domestic company. Next, we have to discuss the 79 and 79A. So, in intermediate setoff and carry forward chapter, we have this provision. But we have in our CMA final also these provisions in the assessment of a company. Now, last one is an buyback. For last attempt, it may not be important, but for this attempt, it is an important. Why? Amendment concept. So that's why we can spare some extra time also for the company. The remaining can be completed in an easy manner only, because the PCBP you are the given as a choice in your intermediate level. That's why I given that all the things mostly, but now also we can discuss total provisions. If we started one chapter, we need to learn completely. Otherwise, if you learn the one provision, two provision, important, super 50, super 10, super 1, it will not work out for the taxation. That's why remember, we can discuss the in and out about this chapter. Afternoon or any evening session, we can go with the new chapter like a non-resident, etc. Okay. No. So first, directly, I want to start with the MAT concept. Okay. Let's, okay, we can take a break around 11 or 11:30 also, but try to participate in this. So I am expecting this question from last 3 attempts. They are not at all given also. Always they are given the PCBP. As per rules, they need to test the MAT provisions related question only, because it is in our syllabus. So that's why if your luck favors, definitely they will give you that MAT question only, but it is an easy compared to the PCBP question. Listen carefully. Section number is what, ma? 115 JB. Minimum alternative tax provisions are applicable for company. Now I will tell you. Sir, how they are given the questions in that exam, that to particularly second question. Yes. So type 1 they are asking, just they will give you the details, and the requirement is nothing but what, ma? Compute tax liability. They are not saying anything. Just compute tax liability of a company. What you need to do? On that occasion, they will give you the P&L account or P&L statement. From that, based on normal provisions of Income Tax Act 1961. What is that, ma? You are required to calculate PCBP. Yesterday we discussed one problem also. Yes, sir. Net profit, PCBP adjustment we have to do. Other incomes are there. We have to add that what, ma? Other incomes like capital gain, income from other sources. You will get the what, ma? Gross total income. From that reduce chapter 6A deduction, you will get total income. On that, please apply the tax rate. You will get tax liability as per normal provisions of income tax. But now they are asking tax liability means, I will tell you, in companies related, we have a numerous deductions. That way this tax liability may be reduced to the zero also in certain cases. Remember, so what is that point, ma? Okay, wait. So because of we have many deductions for the companies, so if you calculated the normal provisions related tax liability, it is as low, as definitely low only. So that's why they are saying, sir, for company, they are introduced the MAT provision. Sir, minimum alternatively you have to pay the tax. Like AMT concept for others, company we have what, ma? MAT provision. They are expecting the minimum how much amount of tax, ma? Yes, I will show you. Yes. So now you have to apply the which concept, ma? Minimum alternative tax provisions means MAT. How to calculate the MAT provisions, ma? First, please take the net profit. For that, please do some adjustment. You will get what, ma? Book profit. So yesterday we discussed the book profit relating to partnership firm. That is a different concept. Now we are calculating the book profit for the company. Okay. So how to calculate the book profit? I will tell you. After calculating the book profit, please apply the MAT rate 15%. Sir, students are applying the MAT rate and AMT rate interchangeably. So please remember AMT rate discussion over. Now MAT rate is simply 15%. Then you will get tax liability, whichever is higher you have to select, and please apply the surcharge and education cess. If they are asking just tax liability, many students are writing the answer only that normal provision. That is not correct. Maybe they are collecting the tax on MAT basis also. Whichever is higher only they want to collect. Sir, if they are given this type of questions only, it will become very easy. Reason I will tell you. So we have to calculate MAT tax liability, normal provisions tax liability. On that occasion, they will give you the less adjustments in the question. If they are targeting only one part, they will try to give that what more and more adjustment. Are you clear? So if they are saying just a tax liability means what of a company, first normal provisions tax liability, MAT provision tax liability, whichever is higher only you are required to pay. Second type, yes, maybe they can ask the, yes, in some attempts they are given this type also. Compute tax liability, ignore MAT provision. What does it mean, Normal provisions tax liability only they are expecting. Simply PCBP, other heads include reduce chapter 6 reduction, you will get total income. On that you are required to calculate tax liability. Now, sir, they will ask the only PCBP also. So no need to find out the other heads, sir. Net profit and PCBP provisions related adjustments you can calculate and you will get PCBP also. And they can ask only book profit also. What is a book profit, Net profit and certain adjustments if you are done, you can get the book profit. Book profit can be useful for calculating the which liability? MAT related tax liability. Next, they can ask the tax liability based on which provisions, MAT provisions. That means, yes, that means, please understood, yes, how they are asking the question. How they are asking the what, questions. Are you clear? Next. So now our target to calculate the book profit. Take a paper and pen also. We have to write the all the adjustments what we need to done for calculating for book profit. Yes, we can spend some time also. So many students are asking this concept. I don't know what is the reason also. It is easy, but they don't know how to proceed with this concept. That is only the reason. If you are not comfortable here, yes, you can shift for you. If you are not comfortable, you can shift. Okay. Now, computation of what, book profit. So what is the agenda for calculation of book profit, if you want to calculate tax liability as per the as per the MAT provision, what is the main ingredient we want to calculate book profit? Now remember, sir, PCBP adjustments are voluminous, because from 28 to 44 we have to read. As per each and every provision we have to think and we have to add or less we can decide. But for calculating the book profit, what is the base we want to take, Net profit or loss as per P&L account of an company that is prepared as per Schedule 3 of Companies Act 2013. So whatever that net profit we got in the Schedule 3 of an P&L account, please take the net profit. For that we have to do that some adjustment. Sir, what are the adjustments, sir? In section 115 JB, explanation 1, they are given this some limited adjustment, not unlimited. Limited adjustment, we have to do that only that limited adjustment. Then we can get the what, book profit. So what is the base for calculation of book profit? Net profit only. For that we want to do that some limited adjustments given in section 115 JB. So add some items they are given, and they are given the some less items also. Some things we have to add to the net profit, some things we have to less for that what, net profit. So first we can discuss about the what are the additions we have to do for net profit while calculating the book profit. Shall we start? Okay. Sir, if all the items from 1 to, yes ma, from 1 to I think 13 are there, not 14, 13 are there. These are all items are, if debited to P&L account, now we have to add for computing that what ma, book profit. Example I will tell you. Sir, it is in your P&L account, assume. So finally I got a net profit, this one. Okay, I am taking this as only a base. If above 13 items I am saying ma, the 13 items are debited means what happened to the net profit ma? Reduce. Now this is not at all acceptable to reduce it from net profit while calculating the book profit. That's why they are saying directly, please add back. These are all the 13 items if debited to P&L account. If debited to P&L account, all the 13 items, what we need to do ma? Add back. Clear? No. Now one by one we can write. So please take just net profit and below you can write add items. Then after we can write the less items, we can go for problems. First add item, and one more thing, forget about the PCBP provisions. Why? PCBP provisions are done as per section 28 to 44. That is a different matter. PCBP provisions we can apply only while computing the tax liability as per normal provision. Now we are doing the section 115 JB explanation 1 adjustments. That's why don't interlink the both the adjustments. While doing the PCBP, forget about the MAT. While doing the MAT, yes, forget about the PCBP. Some provisions may be similar, but it is not exactly same. Now, first one, what we need to add, read income tax paid provision. Please add back if that item is debited to P&L account. And including the what ma? Interest on income tax, surcharge, cess also. Surcharge and what ma? Cess also. Income tax paid, income tax provision, surcharge, interest on income tax, cess, all the things. If debited to P&L account, please do add back while calculating the book profit. Clear? Now, sir, if deferred tax item, so that may be asset reversal, liability reversal. I think you know deferred tax concept. Don't think about whether it is an asset or liability or anything. Debited is there na, then you have to do what ma? Add. Next, third one. Please write in a shortcuts also. If you are written all the things, you can remember for some time. Now, dividend paid or proposed. If anything, dividend paid, debited to P&L account, or proposed dividend also debited to P&L account, please do add back while calculating that what ma? Book profit. Fourth one. Sorry? Any dividend also. Dividend always include interim dividend. Dividend always include interim dividend. Yeah, anything also. So deemed dividend normally they cannot give by way of dividend. They can give the assets, they can give the bonus shares, etc. So that will not be included as directly they will not give, indirectly they will give. Now remember. Fourth point ma, any amount transferred to any reserve. Can you pass journal entry? Can you pass journal entry? From P&L account to, we are transferring one amount to that what ma? Example CRR, capital redemption reserve. Generally, P&L account balance is reduced, that's why we debited. And one reserve balance increase, that's why we credited. So that means if you are doing the ledger posting in P&L account, what is that amount debited ma? CRR. Sir, whatever amount if you want to transfer to the reserves, which balance is reduced ma? Net profit. companies will do this practice frequently, sir, because redemption of preference shares cases, or if anything they want to transfer as a resource, they can transfer. Because of that, what is the reduce in net profit? I am not allowing this type of practice. Whatever that amount of an P&L balance is reduced because of transferring to that other resource, please do add back. Here just I am taking that example as an CRR. From P&L, any balance is transferred to any reserve account, definitely that is a debited to that what my P&L account. Please do add. Clear? First 4 points. Please repeat. Dividend, income tax paid, income tax provision, including interest on income tax, surcharge and education. Second one, deferred tax. Third one, dividend paid or proposed dividend. Next, any amount transferred to any reserve. Next, sir, in companies, mostly they will create a provisions for the uncertain liabilities. Like now, our provisions also needs to be added. But here we are created the provision for whom? Our subsidiary loss related. That's why that is also we have to do add back. Here we are created the provision for loss relating to subsidiary. That also we have to do what? Add back. Provision for which liabilities? Unascertained. Remember, if in the question, if they are given the provision for ascertained liabilities, don't do anything. If that is an uncertain liability, we have to do what? Add back. Provision for contingent liabilities also we have to do what? Add back. Okay, give me 1 minute time. Just check it out this screen. Yes. Now, provision for gratuity, provision for leave salary, provision for warranty based actuarial valuation. These are all are called as what? Ascertained liabilities only. So that's why no need to do what? Add back while computing book profit. What are the 3 things? Gratuity, leave salary, warranty based actuarial valuations. Clear up to now? Now, these are all our ascertained liabilities. I am giving the examples of ascertained liabilities. So if they are given these 3 in an exam, if you created the provision for gratuity, provision for leave salary, provision for warranty based actuarial valuation, these are ascertained liabilities only. We can know exact amount of the liability we can pay in a future. That's why these are ascertained liabilities only. These 3 are examples of ascertained liabilities. They will not ask you beyond this. Remember these three ascertained. The remaining all are what? Unascertained only. That's why if you create the provision for unascertained related, definitely we have to do what? Add. Now, next one, provision for diminution in the value of any asset. Can you give me one example? Debtor balance. Debtor balance is diminished because of the what? Bad debts. If you created any provision for bad debts, definitely that provisions also should be added back. Just remember, in next topic I will tell you. So normally one structure I will tell you. I am an unit holder. I will invest my amount in the business trust. I am an investor in the business trust. If I am investing in the business trust will give you that what? Units. Again, this business trust will invest the amount in the SPV, special purpose vehicle. That is nothing but what? One Indian company. That is nothing but one Indian company. I will tell you in the business trust chapter in detail way, but try to listen. So now what is that point? Exact gained loss or notional loss? Notional loss. Regarding exchange of SPV shares, that means what? This Indian company shares exchanged with the business trust units. Maybe some cases you can get the loss. That loss, if they are created, that needs to be what? So nothing but any notional loss on exchange of shares of SPV with the business trust units. Now, so for this Indian company, while if you are calculating the book profit, yes, what? If any notional loss is there for that exchange of business trust units with the SPV shares, okay, normally they can create the provision of what? Notional loss. So now automatically this notional loss needs to be added back while computing the book profit of what ma company. Simply provisions, notional losses, always we have to do what ma add. Remember, notional loss, not a gained loss, just we got an estimated loss simply. It is not a realized loss. Now next one ma. So these are the incomes are called as an exempted incomes ma, section 11, 10, 12. If you earn this income, that incomes are exempt or taxable ma, exempt. But these expenses are always will debit to that what ma, net profit and loss account. Sir, if you got this income, you are saying exempt, then I will not give these expenses as a deduction. So that's why please do add back. Please do add back. Can you tell me, if you are incurring any expenses for earning of exempted incomes, what we need to do ma? Please do add back. Next, one more point ma. So 9 points are over. Now we can recap the 9 points. First one, income tax paid or provision, including interest on income tax, surcharge, cess. Second one, deferred tax. Third one, dividend paid or proposed dividend, any amount transferred to any reserve. Provision for loss of subsidiary. Provision for unascertained liability, contingent liability. Provision for diminution in any value of asset. Notional loss on exchange of SPV shares with the business trust units. Next, expenses for earning the exempted incomes under section 10, 11, no, 10th point. You know some concept of AOP, but I will tell you again, listen. Sir, association of person means any person can become the what ma? Member. Any person can become the member. Okay, in this AOP, company become the member, partnership firm, company, LLP, or. So if AOP got the profit, on that profit, who required to pay the tax ma? AOP only. So in certain cases, AOP is required to pay the tax at MMR. Remember, AOP normally they can pay the tax by using slab rates only, because AOP having the tax regime like 115 BSc. If they are opting from the 115 BSc, they can follow the old regime. But in certain cases, they can pay the tax by using that what rate ma? MMR. Means what ra? Maximum marginal tax rate. That means they are paying the highest tax rates using tax liability. Now, after payment of tax by the AOP, that share of profit will be given to what ma? All members. One of the member is nothing but whom ma? Company. Now, in the hands of that company, that share of profit is exempt or taxable? Exempt. Because already who paid the tax on the total profit ma? AOP. After payment of tax only, the share received by these members, in the hands of members, that share of profit is exempt or taxable? Exempt. Share of profit is what ma? Exempt. Same concept like in partnership firm. A partnership firm is paying the tax on their profit. Share of profit is exempt in the hands of partners under which section ma? 10 subsection 2A. Like the same concept here also we can apply. They are already paid the tax on their profit. Yes, if the share of profit is received by the members, the share of profit is exempt or taxable? Exempt. But remember, if they are paying the tax at MMR, then only share of profit is exempt in the hands of members. Now, I am taking the member example as a company. Sir, without investment, they will give you share of. With investment ma? With investment. So that's why company invested how much amount in that AOP? 10 lakh. With regarding that investment, I am taking a loan. On that loan, how much interest I paid ma? 1 lakh. That means, in order to earn the share of profit, I am incurring what expenses ma? 1 lakh. Simply, company taken a loan of 10 lakh, that amount is invested in what ma? AOP. So now, we are earning the exempted income. For that, one expenditure we incurred. What is that expenditure? Interest. That is not at all Yes, ma, debited. So we have to add back to the net profit while computing the book profit. Again, I am saying expenses related to share of income of AOP. Expenses incurred related to earning the share of income of what ma AOP. Now, can you tell me? Definitely, the company taken this 1 lakh as and debited to the P&L account. While calculating the book profit, we have to do that what ma add back that 1 lakh. In which case, if they are paying the tax at MMR, then only that will be exempt. Then only we have to add back this what ma expenditure. So this is an important point. Are you clear with this ma up to now? Now next one. Ma optional tax rates for the domestic companies or for all companies ma? For domestic companies. Correct only? Now, MAT concept is applicable for domestic company or foreign company or both? Both. MAT applicable for all companies including foreign companies also. Optional tax rates only for domestic company. Now, remember here foreign companies are earning the, yes ma, two incomes, capital gain on their securities, second one interest, dividend, royalty, fees from technical services, incomes they are earning. Now, yes ma, income earned means always it is credited to what ma P&L account. Normally, as per that Companies Act 2013, income means it should be credited to the P&L account. Okay. Some amount is credited, but we are given the tax at the rate of what ma 5%. So special tax rate taxable incomes ma capital gain, interest, dividend, royalty for foreign companies, we can levy the tax at the rate of special tax rate. Now for example 5% only the tax we are paying on this income. In order to earn this income, we are incurring some expenses. Example, how you are earning the capital gain, how you are earning, these are all the things ma. For that we are incurring certain expenses. That expenses is debited. But on this just you are paying that which percentage ma 5% tax. But finally we calculated the net profit. Remember, MAT rate is how much ma? 15%. MAT rate is how much ma? 15%. But now on these incomes you are paying the less than 15% or more than 15%? Less than 15%. I will tell you the logic. If you are earning that income, just you are paying the tax at the rate of 5%. But you are reducing these expenses from the, yes ma, MAT related book profit. So on this I want to collect the what ma? 15%. Remember, you are paying just 5% tax only, but you are reducing these expenses from the income liable to be taxed at the rate of what ma? 15%. That's why I will not allow this debit treatment. Please do add back. When we can do this add back of these expenses ma? Remember, if these incomes are taxable less than which rate ma? MAT rate. So why? So generally, I want to collect the total tax at the rate of 15% as an MAT. But you are paying just what ma? 5%. You are paying the tax at the rate of 5%, but these expenses are reducing from which income ma? 15% tax payable income. That's why please do add back. The same point ma, one important section, income from royalty, 115 BBF. So what is the tax rate we have to apply ma? 10% we have to apply. This is a special tax rate. 115 BBF on royalty income, we have to pay the tax at the rate of 10%, which is less than MAT rate or more than MAT rate? Less than MAT rate. You are earning the royalty income, on that you are paying just what percentage ma? 10%. But you are reducing that expenses from the 15% tax payable incomes. That's why they are not accepting it. Please do what ma? Add back. Next 13th item, last item ma? Total depreciation debited to the P&L account. Total depreciation debited to that what account ma? P&L account. Ma logic is same for the adjustment number 11 and 12 ma. But it is a fixed rate 10%. But we can't say about these rates ma, that rate may be more than 15 or less than 15. If that is a less than 15, that expenses we have to do what ma? Add back. So some cases it may be 25% also. On that occasion no need to do what ma? Add back. Clear? So just I am given the 2 minutes time. Please do the all the add items revision. Don't by heart. In exam, if you are seeing that adjustment, automatically you will get an idea. Don't by heart. Just refer that once again. Total add items. Yes. Yes, ma'am. Please refer income tax paid, provision, deferred tax, dividend paid, proposed dividend, any amount transferred to reserve, loss or provision for loss of subsidiary, provision for uncertain liability, provision for contingent liability, diminishing the value of asset related provision, notional on exchange of the shares of an what ma Indian company SPV with the what ma business trust units, expenses incurred for earning the exempted income under section 10, 11, 12. Next, expenses incurred related to earn the share of income of AOP. On the share of income of AOP, if AOP paying the tax at the rate of MMR in the hands of that company, that is exempt or taxable ma? Exempt. Exempted income earning related expenses, if debited, then we have to do add back. So this point is applicable for foreign company ma. If any special tax rate taxable income, if they end, if the tax rate on the special tax rate taxable income is less than 15%, then related expenditure if debited, we have to do what ma? Add back. Next, income from the patents, income from the what ma? Royalty, taxable at a special tax rate at the rate of 10%, always under section 115BBF. Now, this rate is less than MAT rate or more than MAT rate ma? Less than MAT rate only. That's why that expenses are debited means we have to do what ma? Add back. Total depreciation, whatever that amount is debited, please do add back. Now, this 14th point I will discuss after 5 minutes or 10 minutes ma. Then we are going to be talking about the less adjustment. But remember, sir, done sir. Sorry sir. Don't think sir. So normally we have an deferred tax asset is there, reversal is also there. Like deferred tax liability is there, reversal also is there. Don't think about it. Debited means add. If yes, if credited, you have to do what ma? Less. So I don't know whether it is an debited or credited as per the deferred tax concept. I don't know exactly what is that item debited, what is that item credited to the P&L account, whether reversal treatment. I don't know exactly. That's why if debited item is there, then you have to do add. If credit item is there, what we have to do ma? Less. Now, sir, our work totally done, sir. Less items are purely opposite to what ma? Add items only. Our work is totally done. Now, remember, if credited to the P&L account, these are the following items are credited to the P&L account. So, can you tell me, because of this credit, net profit is what ma? Increase. But, sir, department, why that is reduced, sir? Because of an consequential adjustments. Previously, without any doubt, what you are doing ma? Adding. Equal and opposite adjustments are there. So that's why mandatorily they have to reduce. Previously, what happened ma? Because of these debit items, what happened? Net profit is reduced. So that's why without any thinking, they are adding the nearly 13 items. But equal and opposite adjustments are there. That items are what ma? Credited. Now, definitely you have to do what ma? Less. Definitely you have to do what ma? Less. Are you clear? No. Deferred tax. Whether it is an asset, a liability, asset or liability reversal, whatever it may be, please think you have to less. If credited, please reduce it. Now, second point is important, listen. Any amount withdrawn from the reserve. Previously, we discussed any amount transferred to reserve. If any amount is withdrawn from the reserve, can you tell me which balance can be increased, ma? P&L balance. In P&L, if any item is credited to P&L account from any reserve, because of this item, what happened, ma? Net profit increase, please reduce it. So, but here one point I written, ma, please check it out. What is that? If reserve made through P&L account in earlier years. In earlier years, we transferred from the P&L to reserve. Now we are transferring that amount from reserve to what, ma? P&L. Sir, opposite points only always. Next, ma, profit of an sick industrial company. This is a new one. I will tell you. Can you tell me what is a sick industrial company, ma, normally? Okay, last years or previous years, if you got on continuous losses, we can classify that unit as an what, ma? Sick industrial unit. Sir, under one, normally, if you are preparing the consolidated financial statements, many companies will be there, subsidiaries, associates, etc. So, out of that, one is nothing but what, ma? Sick industrial unit. So, in consolidated P&L account, you can add this company profit and you can add this company profit. Sick industrial related also, unfortunately, we got an miscellaneous profits in this year. Can you tell me? Sick industrial related also, we got an profit. Because of this profit, net profit is what, ma? Increase. No need to add this profit of sick industrial company for calculating of what, ma? MAT liability. Please reduce it from the net profit while calculating the what, ma? Book profit. Please assume we are preparing the consolidated financial statements in that consolidated P&L account. So how many units we have, ma? That means associate, subsidiary, etc. 3 are there. Out of that, one is a sick industrial. So unfortunately, we got a profit in this year. But exclude this profit while calculating the book profit. Now, sorry, sir. All the things are normal. Sir, one more thing I will tell you. So, I am excluding the CFS concept. Just I will tell you. So, company only. Remember. No problem. Just remember. ABC Limited is there, ma. ABC Limited is there. They are having the 3 units, like 3 branches. So, out of that, one is a sick industrial. Now, you can exclude this unit profit while calculating the what, ma? Book profit. While calculating the book profit, yes, their P&L account always will credit with the what, ma? 3 units profit. Out of that, 1 unit profit already credited. So now, while calculating the net profit, you have to do what, ma? Reduce the sick industrial company related profit. Why? Unfortunately, they got a profit in this year. Continuously, they have a loss only. On that, we don't want to calculate the MAT liability. That's why please exclude it. So next, 4th point is nothing but what, ma? Notional gain. Is quite opposite to that what, ma? Notional loss point. Next, if any incomes are exempt under section 11, 10, 12, if credited, we have to do what, ma? Less. Share of income from AOP, if AOP paying the tax at the rate of what, ma? MMR, if that item is credited to the P&L account, we have to vote what, ma? Less. Any income from the royalty, patents related, what is that, ma? If credited, we have to reduce. Why, ma? This is taxable less than what rate, MAT rate. Next point you can easily understood. Now we are talking about the income. So on the yes, ma, capital gain, interest, dividend, etc. If the rate is less than what rate, ma? MAT rate. Sir, in credit side always we have an incomes. That all the incomes we are reducing while calculating the what, ma? Book profit. In debit items we have in what, ma? Expenses. These related expenditure already we are done as in what, ma? Adding. Now next one, remember depreciation as per the books. So total depreciation we are added. Now do the total depreciation reduce also, but except on what, ma? Revaluation asset. Now remember. So please check it out this screen properly. I will give you that one example. With the help of this example only, you can understand the remaining adjustments, ma. Please check it out this screen. I have an how much assets, ma? 100 is a normal assets. 250 is an original value. That means totally I have 100 rupees normal assets. I have 250 rupees normal assets. But that is revalued to what ma? 300. Can you tell me? Revaluation reserve, how much amount is created in this occasion? 50. So that's why 50 rupees revaluation reserve created. Remember that point. On these normal assets, depreciation is 10 rupees. On these revaluation assets, depreciation is what ma? 30 rupees. Okay, now, what is that adjustment we have to do? So, total depreciation, how much is debited ma? 30 plus 10. How much ma? 40 is debited. While doing that adjustment, what we are required to do ma? Add total depreciation. If any depreciation is debited to the P&L account, we have to add that what ma? Total depreciation. That may be normal assets related, revaluation assets related also we are adding. But now, while reducing depreciation as per books, except what ma? Revaluation. That means what is that item we can reduce here ma? Except revaluation means nothing but what is that the depreciation we have ma? Except revaluation means nothing but what is the depreciation we have? 10. That is only we can reduce. What is the point? This is a very important adjustment. Always they will give you in exam ma. First point, depreciation totally we have to add. While reducing the depreciation, except revaluation assets related depreciation, you can reduce. Now, if that, maybe students are asking the doubt, sir, what about these revaluation assets related depreciation, sir? We don't have any chance to reduce. Yes, there is no chance, but one time we can get ma. At the time of disposal of these assets, revalued assets, we are disposing on the 10th year or 12th year or whatever it may be. On that occasion, whatever the revaluation reserve created. So what is that revaluation reserve balance we should transfer to what ma? P&L. Revaluation reserve, now we need to close. Why? Because that asset needs to be disposed. Revaluation reserve needs to be transferred to the what ma? P&L account. So already P&L balance increased because of transferring some amount from the revaluation. If this isn't credited, okay. If not credited, we have to do what ma? Add. At the time of disposal of any asset, on that if revaluation reserve is created, now we have to close the revaluation account by way of transferring that amount to that what ma? P&L. So if credited, okay. If not credited, what we need to do ma? Add. So that is only this point ma. I think I am not discussed this one. Other additions. 13 items already done. 14th item is a special one. It should be added if not credited. If not credited. Remember, what is that other addition we can do ma? If not credited to the P&L account, what we need to do ma? Add. Balance in the revaluation of a revaluation reserve on the retirement or disposal of asset. What we need to do ma? We have to add. If not added, you have to do add. Sir, in exam already it is credited, sir. No need to do anything. If not credited, we have to do as an addition, as an 14th point, other addition. Please remember that. Now, so here many students are having that similar doubt. I will tell you. Sir, you are adding the total depreciation, sir. You are reducing the only normal asset related depreciation. Then what about the revaluation asset related depreciation? In that retirement of that asset, we can reduce the 30. We can reduce the 30. That is in what ma? To that extent of depreciation. On which time we can take ma? In the year of retirement or in the year of disposal only, we have a chance to reduce the depreciation of which asset ma? Revaluation asset. So on the time of disposal, two things we have to do. Transferring the revaluation reserve to the what ma P&L. That is an what item? Add item. If not added, you have to do add. Next, on the same time, increased how much amount of net profit ma here? 50. But to that extent of depreciation, we can reduce. That is only this point. Transfer of revaluation reserve. Can you tell me what is that amount we can reduce ma to the extent of depreciation? Now, so I am recapping that entire things. Listen carefully. Depreciation related points only I want to recall. Total depreciation. Please do add. Less. What is that ma? Depreciation except on revaluation. Issue closed. These are only the points they will give you. But if any asset is retired or disposed from your organization, on that occasion, what we need to do ma? Transfer revaluation reserve to the P&L. That means P&L balance needs to be increased. If not added, you have to do add as an what ma? 14th point. So on this addition, net profit increase. That's why they are given this some relaxation. Sir, now you can reduce the depreciation. So what is that amount of depreciation? 30. So now you can add 50. But I will reduce the 50 also. But to the extent of what ma? Depreciation only I can reduce. Net effect, what is that amount increased here ma? 20 only increase. Clear? So now one more point ma. So at the time of doing the problem, you will get a lot of clarity with regarding the depreciation. Depreciation points are always simple. Add total depreciation. Reduce depreciation except on what ma? Revaluation asset. It's closed. Beyond that, they will not give you an exam. But remember, if any revaluation created related asset is disposed on that occasion, we have to do the two things. The first thing, we have to transfer the revaluation balance to the P&L. So on that occasion, P&L balance needs to be increased. If not increased, you have to do add. At the same time, we can reduce the one more amount, but that amount restricted with the what ma? Depreciation on revaluation assets. Next, last adjustment in the less point ma. Brought forward business loss or unabsorbed depreciation as per books, not as per income tax records. As per books, please check. Sir, Himanshu Kapoor, I asked one question in your revision class, sir, you liked but not replied. Sir, YouTube access is normally within the many persons, sir. If you liked also, how can I know, sir? If you have contacted me in a WhatsApp or Telegram, I can give reply. So if you are given a YouTube comment, and YouTube comments, na, unfortunately, I got more YouTube comments, sir. That's why contact with me in a WhatsApp or Telegram. In my free time, I will try to give a reply, sir. You like it, sir, but not reply. Now, remember, ma, whichever is lower only, you can take it as a less. Unabsorbed depreciation as well as brought forward business loss. Next, in these two cases, you can take the both the things as an less ma. What are the case ma? If company, yes ma, going further, corporate insolvency resolution process, corporate insolvency resolution process. Second one, I think your compromises and arrangements in the law chapter 241 and 242 provisions are applied automatically. In these two cases, we can take the both the items as on what ma? Less. Finally, you will get the what ma? Book profit. Yes, we can discuss the 2 to 3 problems. Adjustment, what is the base we have to take ma? Net profit. If that is in companies related. For electricity companies, banking companies, to regulations or respect to acts, net profit only we need to take. Next, if that company located in IFSC, what is that MAT rate ma? 9%, similar to AMT provision only. Next, one more point ma. This is a 7-mark question they are given based on just this point. Listen carefully. Sir, whether you are paying the normal provisions income tax, But still you are required to pay the advance tax provisions related as well as interest provisions you have to pay. So simply MAT provisions is unapplicable. We paid the book profit into 15% plus surcharge and health and education cess and tax liability. But you have to pay the advance tax and advance tax related interest A, B, C under section 234 you have to pay. Sir, for life insurance companies, MAT provisions are not applicable. Remember, for life insurance. So marine insurance, fire insurance, etc. MAT provisions will apply. For life insurance companies only, MAT provisions will not apply. If any company chooses the 115 BAA, 115 BAB, for that also MAT provisions are not applicable. Sir, I think we have an 3 optional tax rate for the domestic companies. 115 BA, 115 BAA, 115 BAB. Now, I will tell you in which case MAT will apply, ma? Yes, MAT will apply. Here, MAT will apply. Here, MAT will not apply. Here, MAT will not apply. 115 BA if you chose, MAT provisions will apply. And I haven't 24 hours only. I'm in other city, I will tell you. Okay. Next, ma. Now, 115 JAA. What is that, ma? MAT credit. 115 JB is MAT provision. 115 JA is MAT credit. Same like as an AMD credit. Please check thoroughly. If you are paying the MAT on that occasion, excess over normal income tax, we can create that what, ma? MAT credit. So that can be carry forward for how many years, ma? 15. In the year in which you are paying the tax based on normal provision, you can set up the already available MAT credit, but to the extent of difference between the what, ma? MAT and the normal provision. What is that, ma? 1 lakh. The remaining you can carry forward to the how many years, ma? 14 years. So normally 1 year is exhausted, that's why 14 years. So remember, this is an important point. Ma company means, I think you know, in business restructuring, private company or unlisted public company can be converted into what, ma? LLP. Yes, definitely they can convert. Now, they have a MAT credit in their books. Upon that conversion, they can give this facility to LLP? No. LLP required to follow that MAT provisions or AMD provisions? AMD provisions. So that's why even though they have taken that credit of MAT also, there is no use. So that's why MAT credit will not be allowed to LLP. Are you clear, ma? Now, one small point I will tell you. So this is an example I am given. So how to utilize the MAT credit, etc. Just refer. If time permits, refer, not required. But remember this. So I want to spare nearly I want to spend the most of the time for the each and every item also. I haven't fear. If I am excluding, it will take certain 5 to 10 minutes for discussing this provision. But I haven't fear. If I am excluding from this discussion, maybe they can ask this provision only. That's why in MAT I am covering that each and every point also. Try to remember this point also. Now, do you know FTC? What is that? Foreign tax credit, ma? Example, I am a resident and ordinary resident. I have an Indian income, foreign income. So definitely double taxation will be there. Whatever the tax you paid in that foreign, now you can take that tax as an what, ma? Credit in India while you are paying the tax. Example, I think already we discussed, ma? One resident and ordinary resident is there. You have in that Indian income 10 crore. Foreign income how much, ma? 2 crore. In India, they want to collect the tax on what, ma? This 12 crore. Definitely, because you are a resident and ordinary resident, which income is taxable, ma? Global income is taxable. It is an Indian income, it is an foreign income. Now, in USA also, they will collect the tax. How much tax they are collected, ma? Example, 30 lakh. This is only called as what, ma? Foreign tax. So here, tax nothing but they are asking the 120 lakh example. Now, whatever the tax you paid in the foreign, now we can take that as an what mark credit, because this 2 crores double taxation is there. In order to remove the double taxation, they are given the relief whatever the tax you paid in that what mark foreign country. Now example, how much we can take ma? 30 lakh. Balance if you are paying, then there is no double taxation, because okay, we are collecting the tax, but we are given the what ma? Credit also. What do you mean by the foreign tax credit ma? Whatever the tax you paid in the foreign country, that is allowed as a credit while you are paying the tax in India. That is only called as foreign tax credit. Now, what is the importance of this point? I will tell you. Company ma, tax amount as per normal provision 1,50,000. How much? 1,50,000. Tax if you calculated as per the MAT provision, that is an 1,75,000. Which one you required to pay? Whichever is higher, you are required to pay. But FTC is available, is same under the both. That means what is the tax you paid in the foreign, it will not change. Yes, how much amount ma? 1,60,000, 1,60,000. Now, can you tell me, if I am paying the tax as per normal provision, how much FTC I can give ma? 1,50,000 only, because to the extent of tax only we can take as on what ma? Credit. More than that we can't take, because forget about the MAT ma. Forget about the MAT provision. Sir, I am following the normal provision. I require to pay the tax of how much amount ma? 1,50,000. What is that foreign tax credit we can absorb ma? 1,50,000 only. Forget about normal provisions. Now, how much amount of FTC I can take from the MAT tax liability? Totally I can take, because I required to pay the 1,75,000. Now I can absorb the total amount of tax liability. Sorry, total amount of what ma? FTC. Remember, ultimately I required to pay here 0, but here balance still I required to pay how ma? 15,000. That is only the point. So, what is that MAT credit we have? Yes ma, what is that MAT credit ma? Difference between these two only we can create that what ma? MAT credit. That is what ma? 25,000. MAT credit is created only in the year which you are paying that what ma? More MAT. So 25,000. But now they are saying MAT credit balance should be reduced. Because of which point ma? FTC point. Sir, I am given the one benefit of foreign tax credit. Again, I am given the MAT more amount. That is not correct. They are given the reduction of MAT credit amount. What is that? So, first, FTC allowed against MAT. How much ma? 1,60,000. FTC allowed against normal tax. How much ma? 1,50,000. This difference will be what ma? 10,000. To that extent, I am reducing the what ma? MAT credit. So finally, what is on MAT credit is available for you in order to carry forward to next year ma? 15,000. Generally, to that extent of difference between these two only we can call it as a MAT credit. But because of FTC point, MAT credit can be reduced. Why? Here, if you follow the normal tax, we can absorb the only how much amount ma? 1,50,000 only. But here we have a chance to absorb the total amount. So that's why extra benefit, how much they are taken here ma? 10,000. The 10,000 I will not allow you to carry forward to the next year. Remember, if FTC point is given, you have to think about the MAT credit. Sir, excess benefit here they are taken that how much amount ma? 10,000. This 10,000 of MAT credit is reduced here. So that's why what is that balance of MAT credit we can carry forward to the next year? 15. So that is only if you are not understood. Yes, you can remember the formula also. MAT credit can be reduced by FTC allowed against the MAT. How much ma? FTC allowed against the MAT how much ma? 1,60,000. And FTC allowed against the normal income tax how much ma? 1,50,000. The difference is how much ma? 10,000. Please reduce the MAT credit MAT credit how much ma? 25,000. Please reduce how much amount ma? 10,000. So that means the final answer is 15,000. Clear? Shall we do some problems? Okay. Three problems we can do. One complete problem we can do, MAT and PCBP complete problem. Exclusively MAT problem we can do, and we can go for that workbook released by the ICMA also. Okay, first, our workbook, in that, please open question number 3 only, basic question from study material. Sir, they are given, it is also for 14 marks in certain items, ma. Please check question number 3, ma. Please check question number 3. Now, yes, ma. What is the requirement they are asking, ma? They are asking just a book profit only, as per section 115 JB. What is the base we have to take for calculating the book profit for a company, ma? Net profit. So that's why please type in your calculator as an 120 lakh. Now, sir, after debiting and crediting of the following items they are given, ma. Now, please just check. Proposed dividend is debited. What we need to do, ma? Add. For this point only I am discussing, ma. Profit from unit established in SEZ. On that we can get the section 10AA deduction, not exemption. If that is section 10 exemption, section 11 exempted income, section 12 exempted incomes are related that if expenses are there, we have to do add. If incomes are there, we have to do less. But it is a deduction, not exemption. Remember, there is no adjustment for this one. Because 115 JB explanation 1 given the limited adjustment. Other than that limited adjustment, no need to do anything. Many students are thinking, sir, this is section 10AA exemption, profit is credited, now we have to do what, ma? Less. But no adjustment. It is not an exemption, it is a deduction. Previously in AMT problem also, we are reducing it from the gross total income as a deduction. It is not an exemption, remember. Now, provision for income tax, what we need to do, ma? Add. Deferred tax provision, what we need to do, ma? Add. Provision for diminishing the value of asset, what we need to do, ma? Add. Next, depreciation is debited how much on, ma? What we need to do? Add. But except the revaluation asset related depreciation, we have to do less. But revaluation related how much, ma? 1 lakh. That means except the revaluation how much, ma? 9 lakh we have to do what, ma? Less. Next, so as per the books of accounts, we have brought forward business loss 12 lakh, unabsorbed depreciation how much, ma? 10 lakh. Whichever is lower, we can reduce it. Please adjust, ma. 120 plus proposed dividend 30 plus provision for income tax 18 plus provision for income tax. What is that, ma? Ma, if you have any doubt, listen carefully. Why you are talking? If you have doubt, you can talk directly with me. Okay, 120 please type. And what are the additions we have to do? What? Please add that all the things unless one item. And this is also we have to reduce. What is the total amount you got, ma? 172. Is there any doubt? Okay, now you can talk with me. Anyone? Generally, I am asking if you have any doubt relating to that adjustment. Remember, here section 10AA, it is a deduction, it is not exemption. They are not considered this for that adjustment while calculating that what, ma? Book profit. Now, please open our workbook first chapter, assessment of various entities. Now we can try any problem also, but remember the similar questions they are given, ma. Shall we do the question number 5, ma, first? Question number 5 we can discuss. Check it out clearly. It is a domestic company they are given, ma. Domestic company they are given. Akka, please. Net profit they are given. After debiting and crediting of these following items. But what is the requirement of the question, ma? They are asking book profit. Yes, ma. MAT liability under section 115 JB. 115 JB. Now, for calculation of book profit, what is the base we have to take, ma? Net profit. So next, if debit items are there, we have to do add. Total depreciation, what we need to do, ma? Add. Provision for income tax, provision for uncertain liabilities, deferred tax, provision for bad debts, dividend received from domestic companies not paid. No adjustment is required. Dividend paid, na, we have an adjustment. Dividend received means that is credited to the what, ma? P&L account. Is there any adjustment is there for less items dividend? No. No adjustment is required. Long-term capital gain related, no adjustment is required. Brought forward business loss, unabsorbed depreciation, what we need to do, ma? Whichever is less, that is an 4 lakh, we can reduce. Depreciation 8 lakh is there, including the 6 lakh, including 2 lakh revaluation asset. That means excluding revaluation asset related depreciation. What is that amount, ma? 6 lakh. What we need to do? Are you clear? Sir, company not opted the concessional tax regime. What is the reason? If they are opted the concessional regime, they will not eligible for MAT. Sir, it is difficult. Huh? You will get accurate answer on your own also. You will get accurate answer. I will try to solve the more questions also. Please try, ma. Please take that calculator. Yes, 50 lakh plus 8 lakh plus 3 lakh plus 2 lakh plus 1 lakh 50,000 plus 1 lakh minus 4 lakh minus 6 lakh. How much amount you got, ma? 55 lakh. Array, you are calculated, directly you are saying answer, calculated. Super. So they are asking the tax liability also, ma. On book profit, what is the rate we can apply? 15%. So book profit only here treated as deemed income. That is not more than 1 crore. That's why surcharge is not applicable. Directly we can pay the education cess. This is a total MAT liability. Sir, any question also easy only. Now we can go for the total question. First we can calculate normal tax liability, MAT tax liability, whichever is higher, that type of problem we can take. Shall we start now? No? Doubt, Remember, sir, in this question, please check, ma. She is asking a doubt related to, sir, dividend received and long-term capital gain related. So, no need to do adjustments while doing the MAT because limited adjustments they are given. Other than that, no need to do anything. While I am doing the normal provisions related tax liability, I have to compute the total income under all the heads. On that occasion, it is an IFOS, it is an capital gain. Remember, that is only the question I want to solve. While calculating the book profit, whatever the adjustments were already written in the notes, please follow that only. Other than that, no adjustment is required. While calculating the book profit and MAT liability, please follow explanation 1, section 115 JB adjustments only. Other than that, no single adjustment is also required. No. I will tell you. One problem I will tell you. After that, you can ask the doubt. Okay. After discussing that one question comprehensive, your doubts can be resolved. If otherwise, I will tell you. Now, So please open the workbook, ma. I will take one comprehensive question. Yes, please take question number 8. It is a past exam question, past MQP question. So I am expecting this question only always, but they are not given. But now maybe please do puja activities thoroughly. Maybe we can get these questions directly in our exam. Direct 16 marks you will get. Now you can enjoy the last session discussions. Maybe you can get some sad feelings while we are discussing the PCBP provision. So I think I came from Hyderabad. I am inserted the total PCBP chapter in last session. Don't worry. Now you can enjoy the total things. So don't discuss anything with the friends. They don't know anything. So you know something, but just refer. After that, I will give a break. In the break time, yes, you can discuss and you can dispute with others also. But now, please listen carefully. P&L account of an Z Limited, they are given. Always they will give you company only. For company only, we can apply the what MAD provision. Now, so debit items, credit items are given, and net profit also they are given. Okay. Remember, interest on bank loan relating to 20 to 23 has paid during the which year ma? Previous year. Interest paid to bank, it is in which payment ma? Section 43B payment. Sir, they are asking tax liability ma. That means first I need to calculate the tax liability by using the normal tax provision, and I want to calculate the MAT. I want to say whichever is higher. So now first I am calculating the tax by using normal provision. I don't want to think about the MAT now. Forget about MAT. Normal tax means nothing but what ma? Aggregation of 5 heads. But PCBP we are required to calculate by using that what ma? Net profit. So first of all, PCBP calculate. If other heads of incomes are there, then you can get the what ma? Gross total income. From that gross total income, please reduce the what ma? Chapter 6A. Then you will get total income. On that, please calculate tax liability. It is only normal provision tax liability. So here PCBP calculation totally depending upon PCBP chapter. Remember, first we are concentrating on that part. Forget about the MAT provisions. Students are confusing and students are doing the mistake in this area. Some adjustments from the MAT, some adjustment from the PCBP. They are mixing both together and they want exemption. So this is only the real fact. While you are doing the normal provision related tax liability, forget about the MAT. So okay, now first we are also calculating in the same way. Computation of total income as per other provisions means what ma? Normal provision. So first we have to calculate the PCBP. So that's why we started from the net profit. What is the net profit they are given in the question? 45,80,000 they are given. 45,80,000 they are given. For that we want to do that adjustment as per the PCBP chapter. Now, one by one we can discuss. Raw material consumed allowed. Rent also allowed. Salaries and wages also what ma? Allowed normally. Depreciation as per Income Tax Act 1961 allowed. But it is as per Companies Act 2013. That's why we want to do what ma? Add. Now what we are doing that adjustment ma? PCBP chapter adjustment. So this depreciation as per Companies Act 2013. That's why we are doing that what ma? Adding. But income tax rules related depreciation is how much ma? 4 lakh. This we have to do what ma? Less. Next ma? Provision for contingencies allowed or disallowed? Disallowed. Provisions always disallowed under Income Tax Act 1961 under the PCBP provision. Section 37 we discussed also. Now, wealth tax of earlier year, what we need to do? Disallowed. Why? It is an example of direct tax. Direct tax means income tax, wealth tax. Always what ma? Disallowed. Loss of subsidiary, disallowed. But customs duty is nothing but what ma? Allowed. If it is an actually paid, but it is an unpaid. So that's why it is also what ma? Disallowed. Customs duty means indirect taxes is allowed if it is paid on actual payment basis. In that point they are given unpaid on or before the due date. So that's why that is also disallowed. Proposed dividend, disallowed. Provision for income tax, disallowed. Now I am discussing these are all the adjustment as per Income Tax Act 1961 for computation of PCBP. Credit side ma sales is given, closing stock is given, happy. Now remember interest on bank loan. Please check above interest on bank loan. Any point is there ma? No. Interest on bank loan related to which year ma? 20 to 23 is paid in that previous year 24, 25. I think if you know deduction allowed on actual payment basis. In this year not paid. That's why that is what ma? Disallowed. Now you can take that amount as an what ma? Deduction. Yes. Remember interest on bank loan of earlier years. That is normally required to pay on or before the due date of that assessment year ma. That is not at all paid before this return of income due date. That's why in this year that is what ma? Disallowed. But in the which year that is allowed ma? In the year of actual payment. In the year of actual payment, now we can take that amount as an what ma? Deduction. Not given in that P&L because yes, on accrual basis they prepared ma, but that's why now you can take that amount as a deduction. How much amount ma? 1 lakh. Remaining all you know ma. But why they are given the fifth point? Do you have any idea? 25% we have to apply. Lifetime they are not achieved the sales more than 65 lakh. Sorry, 65 crore. So normally all years means what ma? Less than 400 crores only. That's why what is the rate ma? 22%. As per income tax record, as per that income tax records, what is the loss they have ma? 42 lakh. Now please take 48 lakh and all the adjustments if we done as per the PCBP of the chapter. Now we have an PCBP how much ma? 50 lakh. But last year loss they are given in this question how much ma? 42 lakh. 42 lakh. So can be set off ma? Yes. Earlier year business loss can be set off against the present year business income. Yes. How much amount of gross total income we have ma? Ma 7,50,000. In that question itself, we are eligible to take the one chapter 6A deduction 80G. How much ma? 1 lakh. So if I am taking the 1 lakh, what is that? Total income I have ma? 6,50,000. So now we can calculate the tax liability at the rate of what ma? 25%. There is no need to add the surcharge ma. So that's why yes, this is only tax liability I have, but I need to add that what ma? Health and education says, but separately we can add, no problem. 25% why we are adding ma? Because normal provisions related tax liability we have to pay at that rate of 25%. That means as per normal income tax, how much amount of tax liability we got? 1,62,500. For this we have to add what ma? Just 4% health and education cess is required. So it's over. But now applying the MAT concept, forget about the total PCBP chapter. I am removing the entire things ma. In exam also you have to carry at least a pencil because we are already written that all the adjustment related to the what ma? Normal provision. Now we want to do the problem as per the what ma? MAT provision. What is the base we have to calculate for MAT calculation? Book profit. On the directly 15% we can apply. Shall we do book profit? Shall we do the book profit? Yes. Now I am erasing the total things ma. Please check it out. I am erasing the total things ra. Why? I am calculating the book profit now. I am calculating the what ma? Book profit now. So what is the base I want to take ma? I am highlighting with the green color 45,80,000. Now P&L items if debited we have to do what ma? Add back. What are the items? depreciation, add, provisions what ma, add, wealth tax related, is there any point is there? No. Income tax is there, wealth tax is not there, that's why don't do anything. Next, loss of subsidiary, add, customs duty, they are talking anything about customs duty? No, ignore. Proposed dividend, add, provision for income tax, add, so they are not talking anything. Next, this interest also no need to consider, custom duty point also no need to consider, this also no need to consider. Yes, remember this is also no need to consider. Now, but remember, depreciation totally we added, except the revaluation we have to reduce also, but here they are not given any information about revaluation, so that's why totally we have to reduce again. Are you clear? First, depreciation added, except revaluation related depreciation, except revaluation asset related depreciation we have to reduce. In the question they are not mentioned anything about the what ma, revaluation things, that's why again I have to reduce. But next adjustment ma, books of accounts related, whichever is lower, whichever is lower means 3,50,000. Please take that calculator. Please take the calculator. Yes ma, net profit is 45,80,000. Net profit is 45,80,000. Net profit is 45,80,000. $45,80,000. For that, no need to adjust 5 lakh, add or less also same. 75,000, 50,000, 1 lakh, 1 lakh, 5,000. Next, minus what ma? 3,50,000. How much you got ma? 45 lakh. Now, on this, what is the rate we have to apply ma? Hey, you got 45,60,000 exactly. You also? Okay. 45,60,000. On that 45,60,000, we have to apply the which rate ma? 15%. So now we can select whichever is higher ma, 6,84,000. For that education cess you can apply and you can get the whichever is higher as a tax liability. While doing the PCBP, while doing the total income as per normal provision, PCBP, other heads, gross total income minus chapter 6A deductions, you will get what ma? Total income. Tax liability you can compute. But in MAT provision, only book profit compute. No need to consider chapter 6A deductions also. Please compute only book profit. On that book profit what ma? 15% directly you can apply. Now you can ask the doubt. Other income no need to consider. That is only the base. No problem. Always in book profit. Yes, example I will tell you. She is asking one doubt. Maybe many person also having the doubt. Sir, total income as per normal provision if you computed. Yes ma, this is a normal provision if you computed. She is asking the doubt. Sir, here they are given the net profit. That means in this all incomes are credited or not ma? All incomes are credited as per books of accounts. In that P&L account of the company, definitely any income also, house property income, capital gain income, all the things are credited. The net profit we are taken as a base. We computed the PCBP plus other incomes. We got what ma? Gross total income. From that we are reducing the what? Deductions. That means chapter 6A deductions. So now there is a total income, on that we are calculating the tax. You are satisfied by you are calculating the tax on all heads of income. Super. Now remember. So now in that she is asking the doubt related to this point only. Sir, now we are calculating the tax liability as per the MAT provision, sir. MAT provision means simply net profit we are taken. Already all incomes are credited now? Yes. So net profit we are taken. For the net profit, certain adjustments you have to do as per explanation 1 to section 115 JB automatically in this book profit, because these incomes are reflected in where ma net profit, automatically that other incomes also will included in the book profit only. Don't think about it. Maybe you are saying this is an PCPP income. No, this is not a PCPP income. It is deemed to be treated as a total income. Because capital gain incomes, house property incomes, all incomes are credited. It is included in Verma net profit. From the net profit, we are doing some adjustments. We are calculating book profit. Book profit means under MAD provision, this is only deemed to be treated as total income. It is not a PCBP. It is an assumed to be treated as a total income. Automatically, here capital gain, other sources, all the incomes included. So automatically it is reflected as an what ma book profit. In that all incomes are included only. Are you clear? Now on this, what is the rate we have to apply ma? 15%, and we can calculate tax. Separately, no need to consider that other incomes, because automatically other incomes reflected in net profit. Net profit, if you are doing the certain adjustments, automatically you will get book profit. It is deemed to be treated as your total income. Don't think about the capital gain income, income from other sources, or any other thing. Are you clear? Okay, we can discuss in break also. Here, remember, in calculation of PCBP, we are excluding that other heads of income. We are separately presented. But here no need of separate presentation, totally included in the what book profit. So shall we do one more problem in workbook? Different problem. Yes, sir. Definitely, if they are given the question related to, yes, math, full marks you can get. It is not just a fake promise. You can experience in your exam also. It is a completely new model. Not new model, they are given. Company assessment. Company problem, and what is that? Debit items and credit items separately given, credits and debits. Now, what is that? Net profit after debiting and crediting of the following items ma 35 lakh. Base we have to take what? 35 lakh. Now, please concentrate on the debits. Please concentrate on what ma? Debits. First one, please tell me, we have to do adjust or no need of adjustment ma? No need of adjustment. Section 10AA related, in exempted income or deduction ma? Deduction. So that's why that expenses no need to add. Next, depreciation related to, yes ma, previous year 23-24, yes ma, that is called as UD, unabsorbed depreciation. Last year depreciation, not present year akka. Next, business loss relating to last year, whichever is lower we can take as an what ma? Deduction. Lower is what ma? 12 lakh we can reduce it. So definitely in less items you can find the whichever is, okay, we can check where they are given also. Ma? They are adding na. Okay, we can calculate on our own whether answer is match or not, that's okay. Can you tell me? So 12 lakh we have to reduce. Current year depreciation, what we need to do ma? Add. Yes, now interest paid to that bank, not required. No adjustment is required. Interest to the bank is not paid up to the return of income. It is 43B payment. If they are asking the tax liability as per normal provision, I will think. Because they are asking the what ma? MAD provision related book profit and tax liability. So that's why I don't want to think about it. Provision for uncertain liabilities, what I need to do ma? Add. Next one ma? Income tax paid ma? Penalties, no need to think. No need to think. If that is an PCBP, then penalties is what ma? Disallowed. Please think up to that MAT provisions only. Next, agricultural income, what we need to do ma? Reduce. Profit from the ESMA SCZ related, no need to do any adjustment. Withdrawal from the reserve, can you tell me what we need to do? Less. So these things cannot be increased. So next, amount withdrawn from revaluation reserve, if not credited, we have to do what ma? Add. Already credited, no need to do anything. So is there any depreciation they are given, but revaluation asset related also they are given. Remember, depreciation we added how much amount ma? 15 lakh. But now, what is that amount of depreciation we can less ma? 9 lakh we can less. But remember, this is an already added. But I think already I told, if any retirement of an asset is happened, now it is an already added, but to that extent of depreciation we can reduce. Can you tell me revaluation asset related depreciation how much ma? 6 lakh. Now 6 lakh. Again I will tell you. First of all, what is the depreciation we have ma? 15 lakh. We are adding. What is the depreciation we can reduce ma? Except the revaluation. 15 lakh is the total depreciation. Revaluation is nothing but what ma? 6 lakh. Except the revaluation asset related depreciation is what ma? 9 lakh. So it is an extra points they are given. So revaluation reserve balance is transferred to P&L. If not credited to the P&L account, we have to credit. But already credited, no need to do anything. But on that occasion, what is at the point ma? On that occasion, yes, we can reduce. If not credited, we have to do add. But on the same time, to that extent of depreciation on revaluation asset, we have to reduce. What is the revaluation asset related depreciation we have ma? 6 lakh. So just take that calculator and try. Please take the 35 lakh ma first. Then add items. Less items. Less 14 lakh. Less 6 lakh. Less 6 lakh. Less 12 lakh. Add 15 lakh. Add 4 lakh. Add 8 lakh. Minus 9 lakh. How much amount you got? Ma? 50? 15. 15. Okay, we can check ma. The expenses relate into, yes, they are not considered. This is okay. Okay, that is not correct ma. Why they are adding, that is not correct, remember. So depreciation, normally we can discuss ma, but solution is wrong only. Don't think about it. So expenses related to section 10AA, no need to do what ma? Add back. Depreciation including the revaluation, totally we have to do what ma? Add. Next, this we have to reduce. Lower of the brought forward loss, lower of the unabsorbed depreciation, what we need to do ma? Reduce. But they are adding. So that isn't one thing. Next one ma, this is a no need to consider. Interest related, provisions needs to be added, as well as income tax needs to be added. Penalty no need to do what ma? Addition. Less agricultural income we reduce. Yes, section 10AA related income no need to adjust. Profit transfer from reserve. This is one thing we discussed in a wrong manner, remember. Yes ma, withdrawal from reserve is there. Yes, withdrawal from reserve, no book profit is increased, is nothing but we discussed that one adjustment related to withdrawal from reserve. What is that point number ma? Reserve is made through the P&L account in earlier years, then we can less. But here, what is that point they are given? Withdrawal from the reserve created in the earlier years only. But because of this, book profit is not increased. Because of that, book profit is what ma? Not increased. So that's why, since no addition in that earlier years to the book profit, that is not considered. So normally we can, but they are clearly given book profit is not increased because of that thing in the last year. So that's why that you can ignore. The remaining things are all are same only. Remember, depreciation excluding a revaluation 9 lakh. But here revaluation reserve transferred to that which account ma? P&L account. So that's why we can reduce the revaluation assets related depreciation also. What is that point ma? 6. So they are given the note points. Check it out. Yes, this is an explanation ma. Withdrawal from reserve not deductible since profit was not increased by the amount transferred to the reserves in what ma? Earlier years. In earlier years there is no impact. That's why now no need to consider that. Sir, remaining all are easy only. You can do and you can discuss all the things in a clear manner. So book profit, first question ma, they are asking only total income. How you can do this problem? Within 5 minutes. First question, they are asking the total income. They are clearly given, ignore the math. Now what we need to do ma? Just normal provisions related total income we have to compute. Second question is 79 ma, after the break we can discuss. And question number 3, they are asking the book profit and book profit and we are computing the tax liability. That means MAT tax liability they are asking. Fourth question just now we done, and please take care while adding that what ma third thing. Reserve if that is made in earlier years, in that earlier years if it is created that impact on book profit, now we can adjust. Clearly they are given, there is no reflection of that all the things in that earlier years, that's why no need to do that adjustment for that point. That is on one point you can discuss. Next, these two questions already done, but this is an question number 6 is an already given in our PCBP chapter last. The same, so same question is given in the last also. Here we have to do the all the adjustments related to house property, salaries, like it is a basic problem. If time permits, please look at this also. So these are only the problems they are given ma. But they are given the one more. Assessment of individual they are given. In that they are asking the house property computation also. Sir, these are very simple only. You can do on your own, but don't ignore the workbook questions. Don't ignore the workbook question. That means they are given that all the heads of income in your intermediate level, how we are calculated the total income, house property, salary, and income from other sources. It is nothing but directly CMA enter question. They are copied here. Now, remaining questions. It is a non-resident question. It is also non-resident question. It is also non-resident. Next, question number 12. They are asking the what ma? Book profit and they are asking the tax liability. Book profit and they are asking the what ma? Tax liability. This is also they are asking the book profit, tax liability, and they are asking the normal tax liability also. Company not located in IFSC, that means what is the percentage we have to take for MAT? 15%. So they are not up at this optional tax rate. That's why MAT provisions will apply. So the same questions are repeatedly they are given. So remaining all the things we are already discussed in the last session, that is an PCBP. Are you clear up to now? So please take a break for that 15 minutes. So exactly at 12 we can start and we can complete the remaining also. Sir,
in the last problem, that is question number 12, we had the profit of the SEC as well as expenses related to it. So you can say that it is a deduction we did not have. But in the first question, only the profit alone was given.
but they are not given expenses.
So we can assume that it is in the first 5 years and 100% deduction. So we should not assume. We can say that for the first 5 years, 100% reduction is allowed.
What are the expenses? They are given the profit first 5 years, 100%. They are not considered. Even expenses we can make the expenses also, but they are not given something that they are not. If income is given, if what we need to do nothing. Expenses also do nothing. But they are not given an expenses. But in this question, work question, they are given income and expenses.
So if income and expenses are of the same amount, then we can.
No need to do anything. Sir, that while you are calculating the book profit, please do consider the MAD section 10AA related adjustments. Whatever the adjustments they are given in the provision, you can consider that only. The remaining section 10AA or any other extra adjustment if they are given, don't do consider that only. Okay, shall we start? Yes, now we can start, ma. Okay, break time done. Listen carefully. After this chapter only, I want to give a break. So that's why if you are arranging properly all the things on the time, so that calculations and all the things we can close and we can take a 1 hour break. If it is 5 na 5 to 6 only the break, lunch break. Otherwise you can take a break. I will continue on. Remember, next I want to start with the assessment of various entities in that assessment of companies section 79 under 79A I want to take. What is the section? 79 and 79A. Both the sections are very important. Listen carefully. '79 and 79A. Now first I want to talk about the only section 79. What is that, mark? Carry forward and a set off of losses in case of certain companies. Certain companies means private company, closely held company, public not substantially interested means private company only. This provision only applicable for the private companies. Next, remember, what is 79? I will tell you. So, during the last previous year, that company got loss. So, normally, if any loss occurred during the last year, we can carry forward and set off in the present year. In the current previous year, we can normally do set off. But in this case, during the current previous year, shareholding pattern changed. So last year shareholders, present year shareholders are same, no restriction. You can carry forward the last year losses with the what ma current previous year. But here we have to check the one condition because of the shareholding pattern changed during the what ma current previous year. Sir, last day of the loss incurred year, last day of the loss incurred year means 31st March 2000 what ma 24. Loss incurred year, last day of the previous year. Can you tell me? 31st March 2024. On that date, how many shareholders are there, ma? 4. A, B, C, D. So each one having the shareholding, sorry, A, B, C only there. Each one holding the one is 34, another one 33, next one 33, altogether 67%. So, sorry, altogether 100%. But what is the change happened in this present year, ma? Last day of the current previous year, please check. Yes, ma, C discontinued. In the place of C, who comes, ma? D. Now, on the last day of the loss incurred year, on the last day of the current previous year in which shareholding pattern changed, these two dates shareholding, if you are verified, at least 51% if continued. So then we can carry forward and set off that loss. Can you tell me common shareholding held by the how much percentage of the shareholding, ma? 67. That is more than 51 or not, ma? Yes. So that's why here whatever the loss is there, now we can carry forward and set off in the current previous year 24, 25. What is the percentage we have to check, ma? 51%. 51% of shareholding is held by the same members. Now A and B only continuing, ma, from last year to present year. If they are holding at least 51% in the both the dates, condition satisfied, we can carry forward the losses of the previous years against the current previous year. Why we have to verify this condition, ma? Reason, private company limited shareholders will be there. So now all of the sudden all the shareholders are changed, that loss not okay, A B C D totally retired ma, here X Y Z and Q came, whose loss ma? A B C D loss, how they can set off? So that's why if they want to set off the last year loss related to this partner, present year also the same partners are holding 51% if continued, the last year loss we can set off. Sir, shareholding pattern not at all changed, sir. No problem, not applied. Section 79 will not apply. It is applicable for only private companies. Now I have one doubt. This is loss of previous year 23-24. Now we can carry forward and set off. No need to think about it because more than 51% is in same in the two dates held by the A and B only. So that's why we can set off. This is applicable for business loss. This provision is not applicable for UD. Unabsorbed depreciation, no need to think about the 51% etc. Directly we can carry forward and set off. Applicable only for the what ma? Business loss only, this section or condition. Now, in these two cases, very important ma, in these two cases, below two things cannot considered as a change in shareholding. Sir, father died, sir. Father died. So that's why the shares transferred to the son. So because of the death, if any shares are transferred, that is not considered as a change in shareholding. Second one, if you are given a gift to relative also, that is not considered as a change in shareholding. So if you are not if you are forgetting these two, we can't do the problems. So normally always we can treat as change, but in these two cases, even though transferred to the other person also, but we cannot consider it as an what ma? Change in shareholding. Now next section also we can discuss 79A ma. What is that? If any undisclosed income you got, I think you know, on that undisclosed income flat, section 115BB is 78% we need to pay the tax. Against that, we can't give the business loss, we can't set up the unabsorbed depreciation. So, but extra I am adding for salary income also, we can't set up these two losses. So, that's why I am giving. So, flat rate we have to apply on the undisclosed income. We can't do the set off of what ma? Losses against the undisclosed income. That is only 79A. 79 is related to what ma? 79 is related to carry forward and set off of losses in case of certain companies, means private companies. This provision is applicable if the shareholding pattern is changed. Otherwise, we can carry forward that all the things. Next, this is a provision related to against the undisclosed income, we can't set off any losses. So in this workbook they are given, and in our workbook also we haven't two questions ma, but we can discuss question from here. Shall we start ma? They will not give the heading as on 79 and 79A. You have to identify in exam whether that question is related to 79 or 79A. Remember, private limited company, public is not substantially interested. They engaged in the multiple businesses. They haven't, remember, they haven't brought forward business loss of assessment year 21-22, 15 lakh and unabsorbed depreciation. How much ma? That means previous year is what? 19-20. Business loss is there, unabsorbed depreciation also there. So on that occasion 10 shareholders are there, each having the what ma? 10% of equity shareholding on that occasion. So now during the yes ma 24-25, can you tell me October 24 means 24-25, right? Yes. On that occasion 4 shareholders are transferring the shares to the what ma? Others. Shareholding pattern changed or not changed ma during the previous year? Changed. So now while doing the set off of earlier year losses, we have to check the condition. What is the condition ma? At least 51% of the shareholders are continued on the two dates or not, we have to check. Next, one more thing. One shareholder died in February 25. That means previous year 24, 25. And another shareholder gift his shares to what ma? Son. Can you tell me? Son is a relative to that shareholder? Yes. So that's why this is also happened in that what ma? Previous year 24, 25. But I will not consider these two things as a change in shareholding. But only one thing is happened as a change in shareholding. What ma? 4 shareholders are transferring. 4 shareholders means what is the percentage ma? 40. Previously, yes ma, what is the loss incurred year ma? Previous year 1920. Please remember, previous year 1920. Last day is 31st March 2020. Now present previous year is nothing but what ma? 24, 25. Last day is 31st March 2025. Now on that occasion 10 shareholders are there. Each shareholder having that what ma? 10% of holding. Okay na? Now out of that here 6 are continued only, 4 only what ma? Discontinued, and new shareholders are coming. Can you tell me what is the percentage we have to check? At least 51. 51. But here 60% continue na? Only how many shareholders are transferred ma? 4. These two cannot be considered as change in shareholding. So that's why business loss, unabsorbed depreciation. So anyhow unabsorbed depreciation can be carried forward without satisfying condition also. But business loss can be carried forward now? Yes. So that is only the question they are asking now. Yes. So now in previous year 24, 25 they have the profit of what ma? Remember, net profit they have as per the provisions before regular provisions before set off is nothing but what ma? 10 lakh. And if you are following the MAT provision, they are given the book profit also. That means as per normal provisions, that means what ma? Total income. As per the normal provisions, they are given the, what is the total income? 10 lakh. As per that MAT provision, they are given the book profit how much ma? 25 lakh. Now they are asking how much loss or unabsorbed depreciation can be carried forward to the subsequent years. Sir, if you are following the, can you tell me normal provisions? If you are following the normal provision, what is that unabsorbed depreciation or what is that business loss ma? Business loss 15 lakh. Unabsorbed depreciation is how much ma? 20 lakh. Now, if you are following the normal provisions, we can give the preference to the business loss only, but we can set off the business loss only how much ma? 10 lakh. Are you clear ma? Why we are given the preference to the business loss? It is a validity of an 8 years. That's why we can give the preference to the business loss. Unabsorbed depreciation again we have to do carry forward. Suppose if you are following the what ma? Book profit related, whichever is lower only we can set off. Lower means nothing but how much ma? 15 lakh. Are you understood the logic ma? So that is only the provision they will give you. Please check it out. Please check it out. Transfer done by the 4 shareholder. So these two things why we are ignoring ma? This is not considered as a change in shareholder. But nothing but effectively continued how much ma? 60%. Yes, 40% is transferring the shares. Remaining 60% effectively continued only. Now, so 51% is applied or not ma? Yes. 51% is continued by the same shareholders only. Tax treatment ma? Remember, tax treatment. So brought forward loss 15 lakh we can carry forward. Set off and carry forward. Unabsorbed depreciation is allowed. So current year profit is nothing but 10 lakh. So we can set off only how much amount ma? As per normal provision 10 lakh only we can set off. So next how much thing we can carry forward ma? Business loss. Business loss, can you tell me here? Business loss only we are doing the set off how much ma? 10. But remaining 5 lakh we have to do that carry forward to the next year. Unabsorbed depreciation totally we have to do carry forward for the what ma? Let's see. So next this is only the provision they are given, but they are not given the treatment about the MAT adjustment or book profit adjustment, but you can write if we are following the book profit related, what are the last year losses we can set off, whichever is lower. But against the normal provisions, income tax only they are written, how much we are set off the business loss 10. This 5 lakh is doing that what carry forward. This 20 lakh also we have to do what carry forward. But while coming to the book profit, what is that amount we can set off So sorry one thing. Already after set off only book profit we can get. Sorry. Book profit means what net profit after doing that all the adjustments only we got. No need to do anything. Remember, after whichever is less we are reducing, then only we got what book profit. So sorry for that. Yes, after doing this adjustment only we got book profit. Directly in that question they are given the what book profit. So that's why no need to do anything. So that is only the point. Remember, clear up to now. Now, in our book we have two questions relating to 79 and 79A. Don't ignore that questions. I think I am given these questions as an yes, very important. Don't take that questions as a choice. I will show you. Yes, ma'am. Question number 19. Question number 19 and question number 20 both are related to section 79. Sir, 79 is applicable for which companies, ma? Private companies. If any change in shareholding pattern happened during the current previous year, if you want to set up the earlier year losses, what is the shareholding continuation is needed, ma? At least 51% is needed. Please check. Are you clear? Now, up to 1, I will take the assessment of various entities. After the lunch break, I will take the non-resident chapter. Okay. Next, ma. In the assessment of various entities, we discussed as of now 79 and 79, a small provision, but they can give for that 7 marks also, 79 provision. Now, shall we talk about the optional tax rates directly? So, optional tax rate, how many optional tax rates we have? Section 115, B, A, B, AA, B, AB. Yes. So now 115 BA is officially removed and we don't have anything covered in CA materials, but we have still this section covered in our CMA final study material, and we are getting that MCQs also in last attempt, first MCQ, this is only. Okay, we can discuss that MCQ also after completion. It is applicable for the domestic manufacturing company set up and registered on or after what date, ma? 1/3/2016. So tax rate is nothing but what, ma? 25%. Surcharge 7 or 12 depending upon total income. Health and education cess is 4%. For special incomes, always we have to follow the special tax rates only. So remember, MAT is applicable or not applicable, ma? Applicable. 115 BA if you choose also, MAT will applicable as usual. Now this is an important. If you follow the 115 what ma? BA, these are the following deductions will not be available. What are the following deductions, ma? Section 10AA, additional depreciation, 32 AD, now removed from syllabus, ma? Investment allowance related deduction, now removed, not required. 33 AB, 33 ABA. What is the 33 AB, ma? We are not discussed in the last session. That is on tea, coffee, rubber development account and site restoration fund. 35. Can you tell me? 35 in-house research is allowed, but contribution to outsiders, it is not allowed under 115 BA. 35 AD. What is that, ma? Specified business. 35 triple C, 35 CCD. 35 triple C is nothing but agricultural extension project. 35 CCD is nothing but what, ma? Notified skill development project. all chapter 6A deductions are not available. Only one chapter 6A deduction will be available. What is that ma? AD, double J, double A. So try to remember this list ma. For remaining section, the same copy and paste will be there for that remaining. What are the thing? Section 10AA, additional depreciation, section 32 AD, 33 AB, ABA, 35 contribution to outsiders, 35 AD specified business, 35 triple C, 35 CCD. All chapter 6A deductions are not available. Only one thing is available, AD, double J, double A. Now, remaining points ma. Sir, maximum rate of depreciation we can allow only what ma? 40% only. Generally, in some cases, if you have a chance to claim more than 40 also, but we can claim the depreciation only to the restricted percentage of what ma? 40. But we can't claim the what ma? Additional depreciation. That's why other than additional depreciation, normal depreciation restricted to what percentage ma? 40%. Once if you choose as the 115 BA, normally ma, you can follow normal, but you can chance to take the what ma? These optional tax rates. If you want to choose this 115 BA, what is the form number you have to fill ma? 10 IB. Once if you choose it, you can't withdraw for the what ma? Same or next years. But after that 115 BA, they are given the 115 BAA or other provisions they are given ma? Upgraded provisions. So you can't shift out from this scheme if you opted. But if you want to shift from the 115 BA to 115 BAA, then they are allowing the shifting option. Generally, if you are choosing this 115 BA, you have to follow it only for the next years also. But no sir, I don't want sir, I want to follow the one upgraded provision they are given for the other companies. So that's why you can shift from the 115 BA for following that what ma? 115 BA. So this is a point important for conceptual understanding, not for exam. Loss related to earlier years. Example, in this year I want to follow the 115 BA. Last year I haven't losses. That all the losses deemed to be felt as an already given full effect. No further deduction for such a loss in any subsequent year. That means now I want to follow 115 BA. If you choose at the 115 BA, last year losses is absorbed only, not real absorption. You can felt it as an absorbed only. For further years you can't carry forward. This point you need to remember. Why I am given the concessional rates are, that's why I will not give you last year any year losses. Generally losses can be carried forward for how many years? My business losses 8 years. So but here that is an already absorbed and we are given a benefit only, no carry forward to what ma? For other years. So now in the last attempt they are given the question. So now try to answer this question. Many students are doing the mistake ma. So I will give you an idea about what is the mistake they are committed also in that exam. Ganesh Private Limited. Sir, first question always optional tax rate question only. Otherwise non-resident question. MCQ. Optional tax rates or non-resident tax rates. Now, Ganesh Private Limited engaged in manufacturing activity. Okay, super. And already they are given that is covered by 115 BA. So many CA final students are excluded from this question here only because so some students will argue with me also. So they will send you I think any other material, CA final material. Sir, this faculty is not given the 115 BA in material, sir. I have that chart screenshot also. So that faculty not given the BA, sir. Only he given the 115 BA, 115 BAB. I will agree. Practically also these two sections only now applicable. But our institute material still continuing the what my old provision like BA also. So I said that on that time. Practically it is not applicable, but ICAMI is continuing that on that time student. So definitely girl only. Okay, she given the reply, sir, think broadly, sir, this is an outdated provision. Why they will give you in an exam? Given in exam. Given in exam, sir. I will think broadly only, but you have to think from the CA perspective to CMA perspective. So what is that new thing? I will tell you. Covered by what ma? 115 BA. Now, for that last assessment year ma, that means earlier year question paper, total income computed as per BA is 24 lakh. That means section 115 BA, if you compute following, what is the total income ma? 20. Yes, easy only. Remember, 24 lakh. But if you following the MAT provision, they are given the book profit, how much ma? 45 lakh. Students are thinking, sir, MAT provisions are not applicable if you are following the optional, but 115 BA and MAT provision, both the things you can take. Which provision having a conflict with the MAT ma? B, AA, B, AB. But simultaneously you can take the both also. Now, what is the tax liability ma? Please calculate. Now, here we have to apply 25%. So, there is no surcharge ma, because total income does not exceed 1 crore. So, that's why only add a surcharge. Here you have to apply what ma? 15%, and please add that what ma? 4%. Please calculate whichever is higher. Ma? MAT is higher. What is that amount ma? 7 lakh? 2000. This is only that answer. Students are confused that what is that? MAT is not applicable. MAT not applicable means they will choose that answer. Please calculate this answer ma. 24 lakh, 25% plus 4%. 6 lakh. 24. That option is also there. So that's why many of the students are picking this answer, but that is incorrect. If you following the 115BA, automatically MAT also will apply. For which provision having the conflict of MAT ma? BAA, BAB. Clear? It is not difficult. If you know the concept, within seconds you can calculate. Are you clear ma? Whichever is higher we are paying, that is an 7 lakh 2000. They are asking including surcharge and education cess. If they are excluding, ask a different answer you can. You can get a different answer. Now, remaining optional tax rates you can follow ma. Now, 115BAA. Sir, this is given in the assessment year 2021 with effect from 2021 year, that is following ma. What is that? I will tell you. For every domestic company you can follow this. So that's why every domestic company, previously 115BA for manufacturing domestic company, yes, it is started the registration on or after what ma? 1/3/2016. But no need of manufacturing, for domestic also they are given. What is the rate ma? 22 plus 10 plus what ma? 4%, effectively 25.168. Sir, this is for business income. Sir, for house property income, income from other sources, that is also same. For special incomes like capital gains, lotteries, gamblings, special tax rate income plus surcharge plus what ma? Health and education cess. Many students are applying for entire income 25.168. That is not correct. For business income 25.168. For house property other income also 25.168. Special tax rate taxable income plus 10 plus 4. MAT provisions will apply no. So then what about the MAT credit already available ma? It cannot be set off against the income. MAT credit will lapse automatically. Sir, if you following this section, what are the benefits are not available? Copy and pasted of the all above deductions. But again I am giving chapter 6A deduction, all are not available, but 3 available. What are the 3 ma? 80 JJAA, 80 LA, 80 M. Clear ma? All of you. Sir, don't buy her, just listen these things. Additionally, I am adding the 2 more deductions are available. What are the 2 more ma? 80 JJAA, 80 LA, 80 M. Now, so the same points ma. Same points, when you are taking this scheme, automatically last year losses, last year unabsorbed depreciation already given a full effect. There is no carry forward to that what ma subsequent years. So for opting this section, you have to fill the which form number ma? Form 10 IC. Once if you are exercised, you cannot withdrawn from the subsequent year. Next, yes, above mentioned conditions are not satisfied. So then the scheme is treated as invalid, and for that same year and subsequent years, which provisions will apply ma? Normal. Sir, example I will tell you ma. You are following for the last 4 years this regime only. That means what ma? 115 BA. In this year, you are not satisfying the condition. Nothing but what ma? You are taking the excess deductions like any other violations if you done. So on that year, afterwards, you can't take the 115 BAA. Which provisions will apply ma? Normal provisions. Next, 115 BAB also I want to take in the same way. So this is an applicable for what ma? Manufacturing company upon the satisfaction of two conditions set up and registered on or after this date and the commencement of business before this date is satisfied, they are given the 15% plus 10% plus 4%, 17.16 for the business income. So next, house property income 25.168 or other sources income also 25.168. Are you clear? Many students are sending this, sir, you are written the wrong. Okay, I can written the wrong in some places, definitely, human nature. But without thinking or without referring the study material, without Google or without using the chat GPT, directly you are saying wrong. Manufacturing related, they are given the benefit. Still you have to follow the same rates like in 115 BAA for the what ma? House property income. Other sourcing, special income, special tax rates and surcharge and education as you have to apply. MAT will not apply ma, and so whatever the MAT credit you can't set off also. What are the deductions are not available? Same above, but chapter 6A deductions 2 available, 80 double JAA, 80M remaining are not available. The same points, but here an important point I want to tell you. Manufacturing means clearly they are given. These are the following activities cannot be treated as what ma? Manufacturing activities. These are the following activities cannot be treated as manufacturing activities. What are that ma? Development of computer software, mining, conversion of marbles into blocks, yes ma, small marble blocks, bottling of gas into cylinder, printing of yes ma, books, production of films, any other notified business. These 6 cannot be considered as an manufacturing. Remember, if you are doing that, any manufacturing of these businesses, you can't follow the section 115 BAB. Because for this section, these things will not be treated as what ma? Manufacturing. Next, if you want to take this section as a deduction, you have to use the plant and machinery as an what ma? New. So, but 20% plant and machinery you can use it as a second hand also, no problem. Imported plant and machinery always treated as what ma? New. Sir, in foreign 8 years already that asset is used. We are imported that for this section purpose we can treat that as an what ma? New. That means imported second hand machinery also can be treated as new. Now, for this manufacturing process, you can't use the one type of building ma. Previously, if that building is used for hotel or convention center, you can't use that building for your manufacturing process. That building also you have to take the newly. So, but if that is an already used for the hotel or convention center, you can't use that building for the manufacturing process of this section. Clear ma? So, on these MCQs, the most frequently they will give you. How many sections are there? BA, BAA, BAB. So BA is an outdated ma. For manufacturing companies, BA is there. But upgradedly they are given the 2 section BAA, BAB. So that's why if normal company, they will go with the BAA. Manufacturing company, upon the satisfaction of the 2 condition, they will go with the what ma? 115, what ra? BAB. So what is the form number if they want to follow the BAB ma? 10 ID. All deduction, all the earlier year losses already set up. There is no further carry forward benefit. Once it is an exercise, it will be applied for the future years also. Next, if any one of the condition is not satisfied in the future, for the same year or the next subsequent previous years, these provisions will not apply. And which provisions we can follow, ma? Normal. Now, capital gain rates I want to tell you clearly. The two short-term capital gain. Remember, short-term capital gain, two types we can get, ma. Short-term capital gain, two types normally. One is an 111A, means what, ma? On financial assets, you can get the short-term capital gain 111A. Other than 111A, you can get. Other than 111A means nothing but what, ma? It is taxable at a normal tax rates only. Okay, for every SSE, it is taxable at normal tax rate. But before amendment, it is taxable at what, ma? 15%. Now it is taxable at what, ma? 20%. Short term, not long term. Okay, 20%. Now remember, so a short term capital gain depreciable asset means we can calculate by using what, ma? Section 50, depreciable asset related capital gain 50. Non depreciable asset we can calculate section 48. If you calculated both the things, definitely it will be under what, ma? Other than 111A. For that they are given the special rates. If that is a company, if they are following the section 115B, AB, what is the rate, ma? Depreciable related 15%, 10 plus 4, totally 17.16. But now 22 plus 10 plus what, ma? 4, 25.168. Depreciable related they are reducing the rate, ma, but non-depreciable they are continued same as an 115BAA. 115BAA. Remember, but 111A assets, listed equity shares, equity oriented mutual fund units. Next one, ma, units of what, ma? Business trust. On these, if you are calculated the capital gain, that is taxable under 111. But remaining assets always under which section, ma? Other than 111A. But now I want to talk about if the company chooses the 115BAB, if they got an capital gain, that too short-term capital gain on depreciable, short-term capital gain on non-depreciable, short-term capital gain on depreciable is taxable at a 17.16 only, non-depreciable, but they are continuing with the what, ma? 25.168. Clear? So next we have to start with the buyback. Amendment provision, and I will pick in one problem and you can do that problem on your own also, but I will tell you the concept, listen carefully. What is that? Buyback? Yes, buyback means what, ma? Repurchase of the shares by the company only, na? Now, remember what is the section number for the buyback? 115QA, buyback of shares as well as specified securities. Shares buyback also, securities buyback also. Now we want to know about the what is the tax treatment. Accounting treatment you know already. Okay, if you don't know also, not at all, not a problem also now. Now, taxation of buyback, ma. If buyback of shares done, we can know the treatment one side. Buyback of securities are done, we can discuss another side. Buyback of shares, buyback is done by the domestic company, buyback is done by the foreign company. Generally, please let me know one thing. I am a shareholder of one company. I purchased the shares with 100 rupees. Now they are repurchasing with 150 rupees. What is the gain for the shareholder? 50 rupees. Remember, that is only the concept. Okay. If buyback is done by the domestic company, if that is listed or unlisted also, same treatment. If that proceedings are done before what date, ma? 1/10/2024. If the proceedings are done on or after 1/10/2024, this is only amendment date. Before, what is the treatment we have, ma? Company required to pay the tax on additional income tax they are required to pay. Example, I will tell you. Yes, ma, amount distributed at the time of buyback 150 rupees, ma. I am purchasing the shares with the 100. What is the company distributing to the shareholder, ma? 50 rupees. On this 50, but it is a gain to shareholder, but they are directing the company to pay that additional income tax on distributed amount. Like 1 lakh shares are buyback here. Can you tell me? Now one example, one shareholder related I am telling. 1 lakh means 1 lakh into what ma? 50. That is only the distributed amount. On this distributed amount, shareholder required to pay the tax exactly, but they are imposing the tax on whom ma? Shareholder, not shareholder. They are imposing the tax on whom ma? Company. So what is the tax rate ma? 23.296. Fixed rate. This is a buyback tax rate on domestic company. If any buyback, not an income tax, is in addition to the income tax. What is the rate? 23.296. What is that additional income tax with respect to secondary adjustment ma? If you want to escape from doing the secondary adjustment, you have an option to pay the additional income tax. Can you tell me on that occasion, what is that additional income tax rate? 20.9664. Okay. Transfer pricing also choice, not ma? That is only okay. 20.9664. But here buyback is 23.296. Definitely they will give you MCQ. You can pick instead of one rate, another rate. Definitely we can pick. That's why remember. Now how you are arriving ma? 20 plus 12 plus 4% they are given, but shareholder not required to pay any tax. That is an exempt under section 10 subsection 34A. But what is the proceedings if initiated on or after 1/10/2024? No need to pay the additional income tax, but it is an exactly gain to whom? Shareholder. So that's why it is not a capital gain. It is taxable as a dividend. It is taxable as what ma? Dividend. Means deemed dividend only. Normally deemed dividend sections, so section 2 subsection 22 class A to class D is there, but now they are adding, class E is there, now they are adding the class F. So section 22 subsection 22, section 2 subsection 22 class F they are adding as an provision. It is taxable as a deemed dividend. Upon that there is no deduction. Flat that amount is taxable. In my case, what is the dividend amount ma? 50 rupees. Before amendment, company required to pay the tax as an additional income tax. After that, who required to pay the tax as an shareholder under income from other sources as a dividend. So this is a treatment relating to that what ma? Buyback of shares by the domestic company. Then what about the foreign company, sir? Foreign company not at all taxable, but shareholder required to calculate capital gain under which section ma? 46A. Amendment is made only to the domestic company buyback of shares. Domestic company, what is that? Buyback of what ma? Shares. But a foreign company related, there is no amendment. Buyback of securities related also, there is no amendment. Now, if securities are done buyback, even for domestic company, foreign company also, company not taxable, shareholder required to calculate the capital gain under section 46A. Are you clear, ma? First question, if I am asking buyback, you need to raise a question, sir, buyback of shares or securities. If I am saying the buyback of what ma? Shares, you have to ask, sir, who are doing the buyback? Domestic company, foreign company. Domestic company means listed or unlisted also say. Then you have to raise one more question. Sir, buyback is done before amendment, after amendment. What is the date ma? 1/10/2024. Then you can say, sir, before if I am saying, so company needs to pay the additional income tax at the rate of 23.296. So shareholder stands exempt. If I am saying after amendment date, sir, then what is the answer ma? Company no need to pay additional income tax, that is directly taxable in the hands of shareholder under income from other sources. If I am asking, sir, buyback is done by the foreign company, sir, company not liable to pay any tax, shareholder need to calculate the capital gain tax. Now, if I am asking about this, sir, buyback of securities, if done by this Domestic company, foreign company also. Company not liable for tax. Shareholder required to calculate capital gain under 46A. Now some miscellaneous points will be there, ma. Please try to listen. After buyback is done, we have to pay the tax on that buyback, that is additional income tax into 23 point what ma 296. Before amendment, nothing but who are required to pay ma? Company. Company needs to pay the tax to the central government within how many days ma? 14 days. Sorry, within how many days we have to pay ma? 14 days. Next again, if tax not paid within 14 days, we have to calculate interest ma. So tax, so nothing but example, 1 lakh ma, on this 1 lakh distributed amount, I have to pay the 23.296 percentage tax. This is an amount on which we are required to calculate 1% part of the month or per month for delayed period. Date after the next 14 days and date on actually you are paying the tax with the government. So this interest percentage is important. Many students are saying on distributed amount they are calculating the interest. No. What is that pending amount ma? Tax. On the tax you are required to calculate the interest. Within 14 days you have to pay the interest. Otherwise you are treated as an SSC in default. Company, principal officer of the company, directors can be treated as an SSC in default. Sir, believe me, if you followed that revision, that means on your own also, please prepare the concepts in and out. Whatever that concept you are chosen, try to perfect in that. Directly you will get 1 or 2 7-mark questions out of that prepared concepts only. So you can write. Along with the MCQs, easily you can secure 40. The remaining things, if you are touched also, like half of the answer, so 1/4 of the answer, 3/4 of the answers, if you are done also, you will get best marks only. So that is only my point. So please try to prepare the concept perfectly. If you are choosing one concept, please prepare all the things perfectly. Next, buyback related one question I am given in that workbook. You can solve that buyback question also. I think yes, my question number 22 you can. Yesterday night I having some health issues, nothing but leg pains, etc. So I'm not able to create that access for the students who want material access. In lunch break or anything, I will create. I will not do escapement activities, etc. I will create. I got your all numbers also. First you have to download my app from the app store. Otherwise I will not give the code, sir. If you are already downloaded with that registered mobile number, then only I can create a coupon code. Otherwise it is not possible from my side. Okay, now. So question number 22 you can do, ma. But they are asking interest also. Interest needs to be calculated on which amount, ma? Tax on distributed amount. What is the rate of interest? 1% per month, part of the month. For which period? After 14 days to actual payment date to the central government. It is an easy question, ma. So remember, sir, now they are doing the buyback on what date, ra? Before amendment or after amendment? Before amendment. Then what is the treatment we have to give? Tax required to be paid by the company only. So now company paid the tax at the rate of what, ma? 23.296. Sir, being an valuationer of your paper, definitely he can felt if you are trying to write that any wrong answers for the landmark questions like. So this isn't, you have to remember this rate. Sir, they are given the senior citizen, but you are taken the basic exemption limit 2,50,000. The total impression will be converting into negative only. Many students are doing the mistakes, sir. One example I will show you. Already in the remaining cases, I already showed that. In some questions, they are given as an amounts in crores. Some questions they are given that amounts in what, mark? Crores. while you are writing the answer also, you have to put the top of the table amount in crores. Otherwise, they will not value your paper. Each and everything is an important. For every question, you have to write the note points. In this question also, I will write note points. And I think during 18, 19 time and my final time, the many faculties are doing the videos and awareness sessions about the in taxation. The note points only will give you the 50% of the marks. Definitely, it is a fact only. Nowadays, all students are writing whatever that answer they want. So, but that is not correct. Every question, please do answer. After that, please put as an heading and write the note points. So, normally, I will show you one question suggested answer, whether it is an available or not also, I don't know. I will show you. So don't check it out all the things, right? So this is an thin capitalization question. She solved all the things. She is my student only. I think EO or regular, I don't know exactly. From your state only, Madurai, I think. Okay, remember. So 7B in capital gain chapter, thin capitalization question, this one. Okay. What is the thing she done? Amount in lakhs she written, but yes ma, this amount in that exam they are given the crores, 25 crores. So normally all the figures are given in lakhs only. She written that, but this is on 25 crores. On 25 crores, if you applied the 10.5, you will get crores or lakhs ma, crores. But she added to what ma, lakhs. That is only the mistake she done. So this is a last attempt, 7B question paper. You can watch along with the question paper also. I think we have my here only. 7B question kada. This is only. What is that ma? These are all are given in lakhs ma. Yes ma. These are all are given in what ma? Lakhs. She is also mentioned as in lakhs only. Very good. But amount of loan given in what ma? Crores. What is that mistake committed? So on that 25 crores, she calculated interest also, but that is crores. But while you are adding that amount to the lakhs, you have to convert into what ma? Lakhs. That is a mistake committed. Next, sir, total answer is wrong only. Based on that EBITDA is wrong, entire answer is wrong only. But she got out of 7 marks, 3 got 3.5. Why? Answer wrong now. Why she got 3.5? So whatever I told in the class, totally she written man. So please remember, I think this is invisible for you, but not visible for me. Okay. Associated enterprise borrowed any sum from the non-resident associated enterprise. If interest payable more than 1 crore, then section 94B is applicable. That interest is allowed. Only excess interest to be disallowed. Excess interest means also she written. What is that excess interest means? 30% of EBITDA minus total points she written. That's why she got 50% of that question marks. So I think many of you means if I am taking that all over India students, they are presenting this is only as an answer. If you are written like this, they will allocate you half mark. Half only. The reason you are doing the solution wrong, you are not written the presentation, you are not written the provision also, how you are getting the marks? You don't, okay, don't check the names, ma. Maybe, if I am taking the permission also, that is not correct. Remember, out of MCQ, she got 24. I haven't 10 suggested answers also. I will show you, every student got 22 plus marks from the MCQs. But they failed to present remaining questions. She got 199 marks. She got 199 or 198. I told don't go for re-verification. That isn't okay. Better than okay. You have to purchase a lottery ticket instead of going for the re-verification. If you purchase the lottery ticket, there is a chance. If you are going for the re-verification, there is no chance of getting that increasing marks also. So that's why, remember, try to write the points. Sir, but normally this question paper strictly corrected, sir. Otherwise, she can easily got that best marks only. She written that all the things better only. Better means best, not better also. So all provisions she written. And one more thing, totally injustice only. Primary adjustment, secondary adjustment question and advance pricing agreement question, totally she written correct only, but they are not allocating that marks as per their records. But it's happened, no problem. In next attempt, she definitely will get qualification. Don't think about it. Now, we can shift it towards our discussion. Now, assessment of a company totally is over, sir. Now, we can start this on small concept. We can take a break. Remember? Yeah, please check. Akka, please check. I will give you the lunch break 1 hour. In that 1 hour, you can sit and you can talk with your friend only, no problem. Up to now, AMT is over, company assessment also over. Now, I want to conclude yes, ma political party, electoral trust, mutual consent within 10 minutes. Within 10 minutes, I will spend ma. So, in regular class also, that is not having the much syllabus. Now, directly I will start with the political party. Yes, remember, political party, taxation of political party. What is the section number you have to remember? Section 13A is nothing but exemption number for the political party. Exemption section number for the political party. If the following conditions are satisfied. Yes. What are the conditions? My next page I written the conditions. We can buy at the conditions also. But now listen. If the conditions are satisfied, PGBP income is taxable. Remaining all heads of income is what ma? Exempt. All heads means what ma? Except a salary. Arey, political party cannot do any job. Only house property, capital gain, other sources. Can you tell me these are all exempt, including the donations? Many political parties are depending on donations only. Donations is an income to them, but including donations are what ma? Exempt only. If any one of the condition is not satisfied, all incomes are what ma? Taxable. Shall we start our discussion ma? So remember, if they haven't buildings, they can give for the letter, they will get house property income. If they haven't buildings, if they are sold, there is a capital gain. So if excess funds are invested in anywhere, they will get the interest or any other dividend income also, income from other sources. These all are exempt if the conditions are satisfied. But even though conditions satisfied also, which income is taxable ma? PGBP income. But if any one of the condition is not satisfied, all incomes are taxable. Now, refer the condition, they have to maintain the what ma? Books of account. Books of accounts needs to go for tax audit. Return of income must be filed on or before the what ma? Due date. Now, remember, they need to maintain the records of the yes ma? Donor. So, who are given the contribution more than 20,000. Example, so for your favorite political party, you are given the 25,000 donation. Definitely they will ask the details of the name of you and address and PAN details, etc. They will ask because they have a mandatory condition imposed for them. If any donor is given the more than 20,000, we have to maintain the records. Then only they can take these amounts as and what ma? Exempted. Otherwise they are required to pay the tax on this also. Next, sir, if any person wants to give the donation more than 2,000, he has to give all the things in the what ma? Electronic modes. Sir, if you are going for any political party, you are given the 3,000 in cash, they will not accept. Because the mandatory requirement is there, more than 2,000 amount they should receive in electronic modes only. Are you clear up to now? So these 5 conditions, if satisfied, then only we can take the tax treatment as an exempt. Otherwise, what ma? Taxable only. What are the things can be exempt if conditions are tax satisfied? Capital gain income, house property income, other sources income, donations. What is that ma? Donations. Now, electoral trust we can discuss. Sir, one problem is there on the political party, you can do. One problem only I am given. So, you can do. That is within 5 minutes you can do ma. So, conditions satisfied are exempt. Otherwise, taxable. Political party over electoral trust. Just within 2 or 3 minutes I will close. Listen carefully. So the MAT and assessment of companies AMTs and voluminous provisions in this chapter. The remaining are simple only. I'm not excluding anything, but just I'm going in a speed manner because these terms are already you know. Next, electoral trust means generally I will give you So public will give the donation to the electoral trust. Electoral trust will distributing the amounts to that different political parties. So now electoral trust can receive the donations from whom? Public. Electoral trust can receive the donations from the public. Now remember what is that point? These all the things are exempt only. Sir, from public if you are receiving any voluntary contribution, exempt only, but one condition is there. What is the condition? Example, in this year they are receiving 1 lakh. Last year 10,000 balance is there. Total how much? 1,10,000. Voluntary donations, present year amount, last year surplus amount, totally how much? 1,10,000. If they are given the at least 95% to that any political party, yes, please they are given the 95% to that any political party, then this amount can be what? Exempt. Remember, aggregate of the donation of current year. Next, along with the surplus brought forward from the last year, out of that at least 95% distributed to the any political party, then this 1 lakh often donations will be what? Exempt in this year. Otherwise what? All incomes are taxable. Voluntary donations are exempt. All other incomes means house property, BCBP, capital gain. If any other income is there, that is what? Taxable. Voluntary donations only exempt if this condition is satisfied. What is the condition? Present year donation, last year surplus, totally out of that 95% if you are giving as a distribution to the political party. Now, electoral trust, even single rupee also they need to receive in the what? Electronic mode only. But political party can receive up to 2,000 in the form of what? Cash. Next, sir, electoral trust can receive the donations from this following person, but a negative list also there. They cannot receive the donations from the following person. Just remember, Indian citizens can give the donation. Domestic company also can give. Residents also can give the donations to the political party. But not a citizen, foreign citizen cannot give, foreign entity cannot, government companies cannot, from foreign source also they cannot get, and any other electoral trust. One electoral trust cannot give the donation to that what? Another electoral trust. Negative list and positive list, try to remember. So not important, but political party, electoral trust, as I said, we discussed. Now coming to the mutual consent, it is a small concept. Now we can start. Mutual consent, shall we start? Remember, so it is an PZBP section number, but we have in this chapter, listen carefully, very easy concept. Mutual consent or mutual association. Sir, mutual consent means it is on self-help basis. No one can trade himself or herself. So without helping of others, we can't do our business. Definitely, yes, mutual consent means nothing but what? So self-help basis for that others only. Now, mutual consent can be formed as a trade or professional association, that is governed by the section 44A. Professional association means all ICMA, etc. These are all or nothing but what? Mutual consents only. But mutual consents may be registered as an what? Mutual insurance activity, that is governed by the provisions of section 44. But in our examination, always we are getting the question from the 44A. Sir, how to calculate the total income of any mutual consent is engaged in the trading or professional association? Trade or professional association, which provision we have to follow? 44A. So without the provision, directly I will do the problem. In that only I will explain the provision. So how to calculate the total income of a trade or professional association? Mutual consent can be formed in two ways. One is a trade or professional association. Another one is an insurance related businesses also. First one, yes, example, ABC is an association, is governed by the 44A. Means you have to remember 44A means nothing but which one? Trade or professional association. They are receiving the subscriptions. How much amount ma? 60,000. But they are doing that expenditure. How much ma? 85. Deficit or surplus ma? Akka, deficit or surplus? Deficit only. How much a deficit ma? 25,000. So now we haven't 25,000 deficit is there. Can we set off against the other income? That is only concept. We are calculating the total income. But in that main activities, I haven't deficit. Can I set up this deficit against the other income? That is only question. Deficiency we calculated, that is in 25,000. Sir, if I am given this question, if I am given the white paper, directly you will write that answer in 2 lines. But how? First you have to show the working note for the deficiency. Particulars amount. This is an universal format you have to follow. Any question also. Yes, heading, particulars amount, total. Okay, many students are using the scales and drawing the straight line. So you will not get any extra marks for drawing the straight lines. But you have to follow particulars amount. Now, sir, already I have an other income. Upon the other income, can I set off this deficiency? Yes, you can set off. Maximum deficiency can be set off against other income. What is that maximum deficiency? Whichever is lower. Actual deficiency 50% of other income. In our question, what is that other income? 75,000. If you calculated the 50%, how much? 37,500. Whichever is lower? 25,000. How much amount ma? 25,000. So now we are set off 25,000. Then total income of our mutual concern, that is a trade or professional association, is 50,000. So how much we are not able to set off ma? So total 25,000 we are doing the set off on. But remember, in case of mutual association not having any other income, here the other income is there, that's why we are doing set off. Suppose in that question they are not mentioned other income, then total income shall be what ma? Nil. Deficiency shall not be allowed to carry forward to next year. This is very important. Maybe the deficiency you are trying to carry forward the next years, but that facility is not available under 44A. If available other income, yes, you can do set up whichever is what ma? Lower. If other income is available, yes, you can set up the amount whichever is lower. If the total other income is not available, yes, total income is 0 and you can't carry forward the what ma? Deficiency to the next years. Are you clear? So now political party over, electoral trust over, mutual concern over. What is the provision you have to remember ma? What is that amount of deficiency we can set off against the other income? Actual deficiency 50% of other income, whichever is lower. Now, yes, pakka MCQ sections. Now remember, 1:30 I will give a break. At 1:30 I will give a break for up to 2:30 also, or 2:45 or 3 also you can take. Okay. Now, 115 BBF, 115 BBG. These two sections are important for MCQ. Directly you will get. Sir, if any SSC got the income from patents, can you tell me which income we can get income from patents ma? Royalty income. So now, if that person is a person resident in India and he is a patentee, means what ma? He is an owner of the patent. Now, yes, he is liable to pay the tax at the rate of special tax rate. That is on what rate ma? 10%. Sir, but this patent must be developed and registered in India. So eligible SC means you know already who is a resident in India and who is an owner of the patent. And if that patent is registered and developed also in India, so developed means nothing but what ma? At least 75% of expenditure you are incurred in India. Means that is called as what ma? Develop. Eligible SC you know, developed meaning also you know, then automatically that is a taxed just at the rate of what ma? 10%. What is the section number? 115 BBF. Now 115 BBG, So carbon credits, normally it is a type of trading securities only. If you got any income from transferring of carbon credits, that is liable to tax at the rate of same 10%. There is no deduction against this income. Flat, what is the rate ma? 10%. So these two repeatedly they are given that exam. What is that? 115 BBF, 115 BBG. 10% only on both the sections. Clear? Now, shall we move on towards the business trust ma? Yeah. Now we can start the business trust concept. But if you are listening the introduction, then you can do the problems given in our ICMAI Institute study material. First listen the concept, automatically you can do the problems. 10 minutes only introduction I will give you. Complete chapter is not required for doing that problem, but on your own also the remaining chapter you can read. But important or unimportant, it is doesn't matter. They are not at all tested till now. Maybe they can test in the next exam. That's why we can do one problem only given in our material. We can discuss that also. Business trust taxation, they are mentioned in which section ma? 115 UA. 115 what ra? UA. Remember. Yes ma? What is that investment flow I am discussing? Concentrate 10 minutes. I will not take extra time even after 131 second also. I will close it down the total session at 1:30 till 2:30 we can take a break, but up to now you have to concentrate. Okay. Now, unit holder, that means I am an investor, I have money. I want to invest in that which thing ma? Business trust. I want to invest in the business trust. So business trust, now that amount is reinvesting in the what ma? SPV. SPV means what ma? Indian company. So again I want to tell you one thing. If you are investing in the business trust will allocate the what ma? Units, like mutual fund only, they will allocate the units. Now business trust means, I will tell you, yes, this is an entity that units are listed in recognized stock exchange, that business trust is governed by the what ma? SEBI regulations. Sir, many persons who wants to invest, always they are thinking about the listed company shares and securities. But these are also listed only. You can purchase the units from business trusts also, because always the unit prices are marked to market only. Now, sir, mainly they will do the business in two areas ma. One is a real estate investment sector, another one is an infrastructural investment. Now what do you mean by the SPV? I will tell you ma. Special purpose vehicle means, so business trust means we can discuss. It is a real estate investment trust or infrastructural investment trust. So these units are listed in recognized stock exchanges. So all the things are governed by the what ma? SEBI regulations only. Next, what is that SPV, sir? Special purpose vehicle. First of all, it is an Indian company in which business trust holds the, what is it, minimum shareholding ma? 50 more than or equal. Example, this total share capital is 1 crore and 1 crore. Out of that, we need to invest how much ma? 50 lakh or more than 15 lakh. Then only this Indian company is treated as an SPV and main investor is whom ma? Business trust on. Now, investment flow. Can you tell me? Unit holder to business trust to SPV. Now, so what is that income distribution? Yes, now this Indian company SPV will give the interest as well as dividend. If you are invested in shares, you will get dividend. If you are invested in debentures or any other securities, you will get what ma? Interest. Exempt or taxable ma? Exempt. For whom? Business trust. For whom ma? Business trust. Remember, if SPV given the dividend income, interest income, it is an exempt or taxable in the hands of business trust ma exempt. What is the reason? Any idea? Because they will not hold the total amount. They need to distribute to that investor. Who is an investor here? Unit holder. So now we are distributing the interest amount and dividend amount. Interest amount in the hands of unit holders is taxable only. But dividend amount taxability in the hands of unit holder is depending upon what ma? SPV tax rates. If SPV opting the 115 BAA, can you tell me what is that 115 BAA tax rate ma? 25.168. If they are following the 25.168, they are paying the less tax only. So that's why dividend amount is taxable in the hands of unit holder. If they are following the normal, this dividend amount is exempt in the hands of whom? Unit holder. Sir, interest amount directly taxable in the hands of unit holder, but dividend amount taxability is depending upon SPV tax rates. No. Sir, first income always you have to remember dividend and interest income. Taxability, one thing you remember, business trust will get the exemption under which section ma 10 subsection 23 FC. But if the same amount distributed to the unit holder, interest amount taxable, yes, dividend amount taxable or exempt is depends upon the SPV optional tax rate opting. If they are opting optional tax rate taxable, if they are not opting exempt. Next, we can get the one more type of income, rental income. Who can give the rental income to whom? So business trust, if you are receiving the directly any rental income, that is an exempt or taxable, exempt only, under which section ma FC is over. Now you can add FCA, but the same amount is taxable to that whom? Unit holder. Two exemptions now we know in the hands of business trust. One is an interest and dividend, another one is an rental income. Now, any other income, can you give me some examples of any other income? Capital gain income, yes. Next one ma long term, short term capital gain, house property, so rental income is over now. Any other income, it is taxable for whom ma? Business trust, exempt for unit holders under which section 1023 FD. So three exemptions are there. Two for business trust, one for unit holder. Now, example I will tell you. So remaining chapter how you are going to read also I will tell you. This is enough for doing problems also. But here, who is an payer ma? Business trust is paying the rental income to whom ma? Unit holder. Unit holder needs to pay the tax. That's why they are required to deduct the TDS. What is the TDS rates? You have to read from the chapter. Are you clear? So here, can you tell me other income? Can you tell me who is an payer ma? Business trust paid to whom ma? Payee. But in the hands of payee, that is taxable or exempt? Exempt. That's why no need to deduct the what ma? TDS. Now, SPV is payer often. Can you tell me what ma? Two things. Interest as well as a dividend to that whom? Business trust. But no need to deduct the TDS. Why? In the hands of the business trust, these two incomes are what ma? Exempt. Now, on redistribution, who is an payer ma? Business trust. Who is an payee? So, interest is taxable. How we are deducting the TDS? Payer is responsible for deducting the TDS. So now dividend cases also, some cases if that is taxable, how we are going to deduct the TDS? TDS related points you can learn on your own also, try to refer overall. But exemptions I want to recap again. How many incomes related discussion we want to talk about? Dividend, interest, rental income, other income. First two things, exemption for whom? Business trust. Under which section? 10 subsection 23 FC, FCA. Last one, other income, is exempt to the whom? Unit holder under section 10 subsection 23 FD. Now, Okay, without wasting our time, we can discuss question number 23 directly. In our old study materials, we have some mistakes. So, but now that is rectified only. Now, please check this question properly. DEF is a real estate investment trust. DEF is what ma? Real estate investment trust. It owns different parts, different parts of in Maharashtra. They have a house property. And that DEF is controlling interest in that which company ma? A Limited is an Indian company. Directly they are given it as an SPV only. If any business trust is having the controlling interest in one company, that is an Indian company, we can call it as what ma? SPV. Directly that given. No. Sir, they are asking different incomes of the business trust is earned during this previous year. They are asking the income of the business trust as well as income of the one unit holder. Unit holder holding the what is a percentage ma? 10%. Many unit holders are there, but he having the 10% interest in the business trust. Now, I want to calculate business trust income in this side and unit holder income in this side. Okay, shall we do ra? Now, first thing please try to calculate ma. Rental income is there. Rental income is exempt for whom ma? Business trust. Under which section? 10 subsection 23 FC. But it is taxable in the hands of unit holder. Sir, out of the 7 crore, X share is what ma? 10%. That is what ma? 0.7. Second one, long-term capital gain means nothing but what ma? It is an other income. Other income is taxable in the hands of whom ma? Business trust. It is an exempt in the hands of, yes, 10 subsection 23 what ma? F D. Next, short-term capital gain on sale of listed company shares. It is also what ma? Other income. Can you tell me the treatment ma? Yes, it is untaxable in the hands of business trust, is exempt in the hands of unit holders under section 10 subsection 23 F D, not B, sorry. Are you clear ma? So this is also other income ma? Short-term capital gain. Yes, can you tell me 8? Here also same. Interest, can you tell me treatment ma? In the hands of business trust, it is an exempt under section 10 subsection 23 F. Sorry, this is an FCA. Sorry, it is a what ma? FCA. It is an FC. But here that is taxable. What only what ma? 10% is. That is an 1.3. It is an 30 total. Here, what is the total ma? 2. Yes, business trust is. Remember what is that exemption to whom and what is the taxable income to whom. The exempted incomes are available for the business trust how many ma? 2 only. What are that? Interest, dividend as well as rental income. Other income means anything other than the dividend and interest and the rental income, all are other incomes only. Other incomes are taxable in the hands of whom? Business trust, exempt to unit holder. Under which section exemption? 10 subsection 23 F2. Now, I want to start the investment fund related discussion. If you are allocating 15 minutes, I can communicate in a better way. Otherwise also I can say, but that will be understood for me only, not for you. Give me 15 minutes time. I will close it down investment fund because the one chapter is over, then we can close this chapter. Okay, live also we can close one separate video. If we are postponing na, so that is not correct. I think afternoon onwards you can also opt it for live session, no problem for me. So yes, you are convenient only. But if you are reaching to home or if you are reaching to PC, many distractions will be there. So don't try that. So till 7 or 8 we can continue. So taxation of investment fund. UA is nothing but business trust. 115 UB is nothing but for what ma? Sorry, 115 UA for business trust. 115 UB for what ma? Can you give me some example for investment fund? Mutual fund only. Simply mutual fund is an example of an investment fund. How mutual fund will pay the tax also now we can discuss. Remember, unit holder will invest in where ma? Investment fund. So now investment fund give the income to whom ma? Unit holder. Mutual fund only assume and you can we can start. all incomes is exempt in the hands of whom? Investment fund. Except PGBP. That means on PGBP income, who will pay tax? Investment fund. So, PGBP income, all the income after payment of tax, we can distribute to the unit holder. Now, how many incomes are exempt normally? Except PGBP, all are exempt. That's why now we can tax the all the incomes, but here we can exempt the what? PGBP. Simply one sentence. PGBP income related tax will paid by the investment fund. Other incomes related tax will paid by the unit holders. Now, sir, who is an payer? Investment fund. Who is an payee? So, while we are paying the all other incomes are taxable or exempt? Taxable. So, that's why we are required to deduct the TDS, refer that what is the TDS rates also. But now in this chapter, always they are given the carry forward related question. Many students are asking the doubt only related to that question. Now we can start the discussion related to only that particular concept. The remaining this chart only. So I want to go directly for the carry forward of losses of investment fund. Sir, if any investment fund having the loss, I am talking about the carry forward or set off? Carry forward. Set off always happened during the previous year. I am not talking about the set off. I am talking about the what? Carry forward and the set off only. Now, if PGBP loss is there, can you tell me on PGBP income who are paying the tax? Investment fund. That's why PGBP loss, if anything is there also, that can be carry forward by the investment fund only. I am not talking about the set off. Please listen carefully. I am talking only about carry forward. Now, if other losses are there, other losses means what? Capital losses, other sources related, any loss is there. On other incomes, who are paying the tax? Unit holders. But loss also carry forward by the unit holders only. So, but condition is imposed in that 6 years back, this condition is imposed. Right? If unit holder holding at least 12 months, then he can carry forward. If he is holding the units less than 12 months, he cannot carry forward. Sir, carry forward or set off? After doing the set off, if PGBP loss is there, who can do carry forward? Investment fund. After doing set off, if other incomes related losses is there, who can do carry forward? Unit holders. But minimum holding period is nothing but what? 12 months at least. Investment fund is required to file the return of income under section 139 4F also. Now we can discuss the two problems with respect to that investment fund. I am expecting these questions, but in MQPs they are given. That's why please try to do the questions from the yes investment fund. 24 and 25, less than 10 minutes we can complete this and we can take a break for 1 hour. Sir, set off or carry forward provision we discussed. Carry forward. Normally we can do set off. Excess, if anything is remaining, we want to do carry forward only. So listen. Please compute total income of each investment fund. How many investment funds are there? Fund A, Fund B, Fund C. Fund A, Fund B, Fund C. Now, they are asking each and every fund, how many unit holders are there? 20. You are requested to compute the income from, you are requested to compute the income of an unit holder also. First they are asking investment fund total income. Second they are asking unit holder total income also. But only unit holder having this income. There is no other income. That means only he earning the what income from this investment fund only. There is no other information. So that's why assume this is only as an income of an unit holder. Now simple this business income will taxed in the hands of whom? investment fund. That's why directly you can calculate investment fund total income is nothing but only business income. Yes, nil only. So loss is there. That loss means we can do set off. So that's why what is the total income of that investment fund ma? Nil, 5 lakh, nil. Now, sir, here fund C having the loss in two things ma. First to do set off. Set off means normally we can do. Set off means business income can be, business loss can be set off against the salaries ma? No. But again other heads it can be set off. Capital loss is there. That capital loss can be set off against only capital gain. But there is no capital gain in this question. So that's why directly it can be carry forward. But what about the business loss ma? Business loss can be set off against the what ma? Income from other sources. That means after set off, what is that income from other sources? Income we have ma? 8 lakh. But now what is the loss is eligible for carry forward after set off? Only capital loss. Who can do carry forward of this capital loss ma? Unit holders or business, investment fund? Unit holder. PCBP loss, if anything is there, that can be set off by carry forward and set off by the whom? Investment fund. Remember, set off you can do as per the normal provision. Investment fund can do set off. But after set off, if excess losses are there for carry forward, PCBP loss can be carry forward by the investment fund. Other losses can be carry forward by the unit holder. Now, 2 lakhs business loss, it is eligible for set off against the other sources income. So that is on what ma? 8 lakh. So capital loss is there, but there is no capital gain income. Directly we can do carry forward. Now, so please calculate the total income of unit holder. Sir, one unit holder income we can calculate ma. Which incomes are taxable ma? Capital gain incomes, as well as which incomes ma? Other sources. Sir, all the things you have to divide it by 20 only. Why ma? Every fund having the 20, but I want to calculate that income for 1. So that is nothing but what ma? Divided by 20. If you are observing that, yes, 20 lakh divided by 20, 15 lakh divided by 20. Here we can place it as on what ma? Nil. Because we have an loss in that. Next thing, income from other sources related, 5 lakh divided by 20, 3 lakh divided by 20. Next one ma? 8 lakh divided by 20. After setup, what is that other sources available? 8 lakh. So that's why 8 lakh divided by 20. This is only the total income we have after what ma? Set off. Then what is that losses available for carry forward? Only one loss, that is an capital loss. It is an carry forward by whom ma? Unit holder. So continuation question for better understanding we included ma. In the next previous year, business income is there. It isn't taxable in the hands of whom ma? Investment fund. But next year we have an capital gain income, other sources income. Other sources income, it will be taxable in the hands of unit holder directly. But a capital gain income is there. But last year lost capital gain we can carry forward and set up by the unit holder. Now what is the last ma? 5 lakh. So then every, how many unit holders are there ma? 20. That is an 50,000. Next year investment fund total income 2 lakh. Next year unit holder, each unit holder total income is what ma? 60,000. Sir, simple thing. Only carry forward restrictions are there after doing set off. So 1 minute or 2 minutes recap and we can close this session. Investment fund means mutual fund only. Investment fund is responsible for payment of tax only on which income? PCBP income. All other incomes are taxable in the hands of unit holders. So next, if after doing the set off, if any loss is there, we can do carry forward. PCBP loss can be carried forward by the investment fund. Other losses can be carried forward by the unit holders. Other losses can be carried forward by the unit holders. Now, remember, excess loss is there after doing set off, for that only we have a restriction. But if they want to carry forward by the unit holders with respect to other losses, one condition is there. What is that condition, ma? At least they need to hold the units for 12 months. Clear? So definitely, if you are not taking this explanation support, or if you don't have any conceptual clarity with regarding that provision, these two questions, yes, you can do fund A, fund B easily. Fund C, you have a doubt. Fund C only we have a loss. First do as usual set off. But why you are not doing the set off of capital gain, ma? Capital loss can be set off against capital gain income, but we don't have any capital gain income. That's why we are directly doing the carry forward in the hands of unit holders. So business loss, we are doing the set off against the other sources. Clear? So that's end with this chapter. And if time permits, you can do the remaining problems also, including the workbook problems. And afternoon session, directly we can start with the non-resident chapter. And we can discuss the workbook questions also. Huh? Sorry? That is not required. You can ignore also. No issue. Okay. Thank you.